Good morning. We're going to be streaming stocks option futures today. It is July 6th, 2023. I'm looking at technical analysis, watching the SPY, watching runners. Finding profits in charts, in the trades, in the markets. SPY, pretty big gap down here, down 0.75%. MULN gapped up 70%. So far, day's good for me. We'll see how we go though. Let me get set up here. Sub up, like up, comment down. Happy money sticks around. Follow us on Twitter. Just tweet out the stream, as well as our Discord server. Link for both those are in the description. Thank you guys for your support on Discord and Twitter. I appreciate it. So yeah, I went short on SPY yesterday and long on MULN. So I actually did close out of both. Close out of my shares on MULN. It's a very small position. Close out of those and close out of the futures I had on the short futures on micro ES this morning. But yeah, we'll just trade today back to normal. I was holding those for a bit. I'd opened them, I guess, back here because I was profitable, but I guess I opened them here sometime. I don't know, but I was up on them and big gap down. Oh, assuming some kind of bounce. However, yeah, we'll get into the T on SPY in a little bit. And MULN shares, I close those just because 70% up and looks like it's double topping here, pre-market at 30 cents. 30 cents would be kind of a resistance, just that even number, as well as did have some topping here before at 30 cents. So I'd probably look for another entry back in though. The catalyst for them fighting legal naked shorting, I know can make stocks go crazy. And then this morning they announced 25 million share buyback. So another bullish catalyst, which is interesting. Potentially it's part of the plan with their attorney and their plan to fight shorts. I'm not sure, but it does seem kind of interesting because they've got a lot of debt. They're pre-revenue. They're cash flow negative. So they do have some cash on hand, but to have a share buyback seems pretty crazy to me. But yeah, so maybe it's part of this plan to get the shorts, trap them. Yeah, we'll see where it goes from here though. It's huge gap up so far. It's gone from 10 cents to 30 cents in less than 24 hours. So quite large, but not to say it can't keep going. I'll look for some entries. And yeah, Guten Morgen to you. Get the Discord link in there for you guys. There we go. You guys had a good rest of your evening, and you're prepared, all rested, hydrated for the day, clear-headed. Thank you for your pre-market likes. We're at 3 of them so far. I appreciate it. Morning, Jay Souls. Afternoon, Sam. All right. MULN is looking good. Quite the pre-market rally. Morning, Buzzing. Getting closer to the weekend. Nice, Zoomy. Well done. Yeah, share buyback. Actually, that's kind of interesting. When did they... I look at their filings. Because yeah, this thing ripped immediately at open. Which makes me think it wasn't from the buyback. That might have been what this was from. You'd have to have a filing for that, right? Buyback is authorized through December 31st. Doesn't mean they're doing it right now, which is a good sign for the company at least, because they shouldn't be spending any money, but they could be doing it now. The company has authorized a share buyback program pursuant to which the company may, until December 31st, purchase up to 25 million in shares with outstanding common stock. Yeah, I mean, it is a pretty big float. That would be good. The authorization of the stock buyback program does not obligate the company to purchase any shares and may be terminated or amended by the board at any time prior to its expiration date. I think this big pump had nothing to do with the share buyback at 4 a.m. I think that's what this was from. 8:05 is when they announced it. So when you get all that volume and that rally back up to 30 cents. We're initiating this buyback program as an attractive opportunity to deploy capital and return value to our shareholders. The CEO. Trying to find the filing itself when it was filed. Yeah, no, I don't think it was filed till maybe 8 o'clock. I don't know, I'm not seeing anything, but that would be unusual to file it at 4 in the morning, I think. Yeah, so I think this whole pump was just continuation from yesterday. That then it was selling back off, and then it had the share buyback rally, I'm assuming. So we'll see where it goes. Look at that consolidation down there. So I think for a full inverse cup to be formed, we're looking for somewhere around here, 438.29. That is also gap fill. Yeah. We're like here, 439.45. So the market still could sell off more today. Let's wait and see. Puts, I got puts yesterday for today. And like I said, I closed my short futures, which I'll probably be trading those today. Can't close my puts till market open. What I have 441s. So those should be pretty nice, pretty deep in the money now. Probably close those pretty close to open. Market open. Oh, you made money, Poison. Made money. Never sucked. All in good to come right back down there. You could get back in again if you want. I'll look for an entry. I'm just gonna follow the TA on it. I like the catalyst of them hiring a law firm for naked shorts. They hired Share Intel back in April, I think it was. You actually even see a reaction from that, but companies hired Share Intel to take a very in-depth look at their stock and how it's performing and all the back-end stuff, and if there is any nefarious activity on it, leading to the assumption that there's price suppression illegally. So they hired them, and then they get a report basically, and it's just been dumped since then. So I think they got plenty of evidence here, enough to where they'd want to spend money on hire a law firm, which, you know, That's not cheap, especially with a company that's pre-revenue, cash flow negative, and lots of debt, I'm assuming. So probably a pretty credible case. Not to say that the attorney will necessarily get a whole lot of money if they do find, you know, illegal activities on market makers or hedge funds or whatever. It's more so that, yeah, you get a short squeeze from it. You get shorts wanting to close because they don't want to be involved. But not to say right when it's, the eyes are back off of it, they won't go back to their old games. Morning, Russ. Yeah, second rip, I think so, Jess. Hey, Rally. Top, really? Good morning, Controls. Toppity top. Are you still in top, Rally? Jeez, man. What do we got? They have a line down there. Was that 705? Well, is it a support? You'd like to see it hold this? Potential. If it doesn't hold here, it might be coming back down to the lows, 550. You're looking for an entry, maybe? Yeah. Yeah, I'd look for reversal, maybe, yeah. I think you're on it today. Does that start to reverse? Swinging top, that's gnarly. No, I like it though. I mean, it's pretty volatile. It's just the huge spreads and the liquidity of it's crazy. What is E-Trade saying for barbecue? It's saying it's down 0.03%, so unchanged basically. SPY is very weak coming into open. GME is down 1.2. Or 38.20. Yeah, that's that gap fill. So we'll see if we get some kind of continuation pattern, like another bear flag or something, or a little head and shoulders, maybe up to VWAP, then finish out the trough here, or the other side of the cup, and start to reverse. Reverse might happen today, or we could just, you know, have to wait and see. All the SPY's low. Yeah, that's what I'm saying. So the getting him in the morning, like if you're getting him in the first hour, you have to. I mean, for me at least, most of the time I'd have success from getting that soon. Is if I'm selling them within a minute or 5 minutes. It's not something I'm holding most of the day. The bigger like intraday trends, those you have plenty of time to enter usually, and you might hold them for a couple hours. So if you're getting it that early, if you're up, you know, 20-30%, just I would just you know, I gotta take profits, because you're paying a higher percentage in the morning, and you're gonna be chopping around, and it's just gonna be volatile, so you don't really know the direction until, you know, the market settles into its trend. So like yesterday morning, yeah, you could have gotten calls at open, but this was kind of a lucky way to get calls and profit on them, because it decided the direction right out of the gate, which doesn't always happen like that. But yeah, you could have gotten calls, but even here, you'd probably want to sell them within, you know, if you didn't have hindsight, I would still be selling them on the way up on all these green candles. But if you want to wait for more the daily move, you could have gotten puts, which is what I did. I got puts right here. I was early. I got them right here on this engulfing candle, and that was the gap fill. Got him there, held through this. Could have closed him here, and I probably should have, but I'm only trying to do one trade a day, so I didn't want that to be not a great idea. But anyways, held through here. That was like 30% I missed. Held through all this, and I was down quite a bit, down like 60% at one point, I think, for here. Then it made this head and shoulders. So this was the kind of the bigger day, the bigger intraday move. Could have waited for this head and shoulders and the break of this kind of uptrend. And it's much slower, and usually it's a bigger move. So you can kind of see the bottoms of these wicks made this channel. You you've got your head, your shoulder, shoulder, and then it kind of broke out here. And coincidentally, right with VWAP too. So that's where you would have gotten puts, maybe here, or you could have gotten them here or here, here. But then this is a lot of time. You know, you've got almost an hour. You could hold those, or you could keep holding them through here. The ones I entered here, I actually didn't. I sold 1 or 2 here, or I think those were like 40%, and then I bought back in more somewhere up here. I think at VWAP. And then sold some here, but not enough. I should have sold all of them. I sold some here, and then, yeah, then we just had that huge rip. So you could have gotten calls here too, even little inverse head and shoulders, but hard to read this part. That's just an end of day rip. So a lot to say. Calls open could work because I think we will come up. It's just, could you get them for cheaper? Probably, and we know when to exit. You can exit at the right time, then it'll probably work because we're down 0.8%. I do think we could continue this cup though, which brings us down to 438.20, which will also be a gap fill. Happen straight out of the gate. I don't know. Could have a bounce straight out of the gate up to VWAP. Morning, Cameron. We've got about 10 minutes to open. We did have data this morning. That was a big reason for the down move today on the SPY. Let's see, we had ADP employment, 220,000. That came out at 8:15. That was the first big data this morning. Maybe it was something at 8 actually. Let's see. Looks like something was at 8 or yeah, 8:05 even. ADP unemployment or employment was 220,000. Previous was 278,000. ADP National Employment Report is a monthly report of economic data that tracks the level of non-farm private employment in the U.S. It is published by Automatic Data Processing, a company that handles payroll for about 1/5 of all privately employed individuals in the U.S. ADP National Employment Report is also known as the ADP Jobs Report. So fewer than last report. Initial jobless claims was 245,000. Previously, it was 239,000. A little definition. Initial jobless claims. Jobless claims are a statistic reported weekly by the U.S. Department of Labor that counts people filing to receive unemployment insurance benefits. There are 2 categories of jobless claims. Initial, which comprises people filing for the first time, and continuing, which consists of unemployed people who have already been receiving unemployment benefits. Jobless claims are an important leading indicator of the state of the employment situation and the health of the economy. So more people on unemployment. U.S. trade deficit came out at 830, negative 68.9 billion. Prior was negative 74.8. Job openings was at, or is at 10. Wait a minute. Oh, I'm sorry. Those are the forecasts. These aren't giving me the actual things. Those are the forecasts for it. Let me see what they actually came out at. Okay, so we missed forecasts on those, I'm assuming. That's the reaction. Because I'm like, these seem like not very bad. They weren't forecasting very bearish results. But I'm assuming it was a surprise. Surprise! Oh yeah, we had data all the way back from 7. 7, we had MBA purchase index, mortgage market index, mortgage refinance index, challenger job cuts, ADP non-farm employment change was at 815. It was 497,000. Forecasts were 228,000. Wow. That's crazy, crazy big miss. And previous was 267,000. So missed estimates by a lot. Team jobless claims was 1.72 million. I believe that, yeah, that's what that says. Forecast was 1.745. So less people on unemployment. So essentially bearish for the market because more rate hikes. Initial jobless claims 248,000. Forecast is 245. Pretty close to estimates. Good balance. Fed Logan. All right, well, yeah, 5 minutes to go. On MULN, yeah, with that kind of gap up, I don't want to give it some time. If I do get back into it, it'll be something I'll maybe be looking to close today as well. It's going to be more of a scalp. It's gonna have to cool down a little bit. It's like way up here right now. Crazy. Yeah, I'm sure you guys will keep an eye on it. Let me know, like, if you're watching. I'm not. If it looks good, looks like it's reversing or bouncing, or looking for something similar to this, like a bounce on VWAP. But I'm assuming the chart will be the other way, somewhat today. Not a straight up line like this. Escalator price action. All right, I'm gonna be selling my puts at just about it, maybe just at open even. Yeah, probably. First few minutes. Then I'll chill. I might look for the long. I'd definitely like to take a long if we hit 438.20 in this area before too much upside. If we go up first, then I'll look for a short. Maybe this gap fill. But we're kind of right in between two gap fills. We just made a gap. We're gonna open like right here. So I do think we're probably still making a big inverse cup here. What it kind of looks like. But maybe not. We might not get that retracement. BBBYQ auction, I think it's tomorrow. Got about 1 minute to open. I heard the show last night. Hannah, I don't think she was a meltdowner. She just has a audience that I don't know. They just like follow conspiracy theorists, stockholders. So basically just the basket of stocks where people go off with crazy tinfoil. And they just, I don't know. They just find joy in it. Posting your... Okay, yeah, I guess then you can call her meltdowner. All right, SPY's open up, down 8.8%. I'm looking to close these puts. Yep, I'm closing them. Okay, out of those SPY puts. Barbecue down 2.5%, 30.21. See if we get a little gap fill here. Still liking the charts as long as we hang out above 29 cents. I would not. I'd probably close. We break that level. It definitely caused a ruckus. Yeah, stirred up a little bit. I mean, that's what viewers like. They like the drama. I mean, that's why you guys like PB Show. Either confirmation bias or drama. Yeah, she gets the drama. Being a contrarian. GME's down 2%. MULN down a little bit. We'll watch these pre-market levels. 20 cents might be a support on it. Market's chilling out. It's not getting an immediate bounce, so we might have a sell-off first, but yeah, not counting on anything at this point. Polestar is up 4.5%. AEMD 26% and rallying. Micromobility. Why are you up 22? I don't know. There's a little flush on SPY. New low of the day, 439.17. $438. 94, it's down almost 1%. So it looks like it's going to form the rest of this cup first. And potentially fill the gap to the downside first. And if you see this, there's a much larger cup and handle, so look out for that. Once we get this bounce, that bounce could bring us all the way back up here. If this is a larger cup and handle forming. It's not just a double top of sorts. Try to be patient. Got a lot of profits today already. Could just watch. Watch and chill. I'll probably end up trading, but barbecue 30 cents, 29.99, down 3.3%. Oh, MULN broke pre-market high right there. 71%. Oh yeah. Well, MULN might keep going out of the morning here. There's 30 cents on it. Figured that was a pretty big resistance, and because it kind of double topped there. So I might pop up above it a little bit, but yeah, for it to be bullish, you'd have to keep going. You'd have to see it flip it into support, which it might be doing. Kind of breakout level back into support. But again, it's rallied so much. If I were to take a trade on it today, it would probably end up just being a day trade. Yeah, I didn't fall asleep last night. Do it, but sometimes I do. House of Barrel stayed up, huh? Yeah, there you go. 130% on barbecue. It's actually higher. I'm not even seeing the 128 or whatever we saw before. Barbecue's cost of borrow is at 130, so the borrow fee is kind of double topping here. You can't really do TA on the borrow fee though, but yeah, it's looking good. Continue to climb. I think it's up to date. They might run out of shares again today. Looks like they probably will. On it though. Oh, okay, flushy on barbecue, down 5.8. 29. That's the level I wanted to hold. Still could be this inverse head and shoulders. Be retesting that shoulder. And still could be in this handle. Gonna have ups and downs all the way up, potentially. Won't just be a straight escalator like we've had. Stop it. There's drawings. I just moved all my lines. They lock and then they just unlock whenever they want and you move them around. Great. It's great. 29.20. I'm going to keep an eye on this. It should bounce here if we're staying bullish, I believe. Or at least hold. What? Oh, MULN kept going. 32 cents it hit. Let's see if it's building a little head and shoulders here. The shoulder would be the head. I do have a line at 32 cents from some kind of resistance. Jeez, dude, the volume of this thing's crazy. 289 million in the first 5 minutes. Let's see, okay. Barbecue, don't do it. Yeah, MULN's up 83% at 31.25. Keep that over here. Mine's just hanging out. Barbecue's down 7.25. 28.75. Market's trying to fill this gap. Inverse head and shoulders doesn't have to play out for this still to be a handle, but did like the confirming pattern. Yeah, MULN kind of rejecting there a little bit. Double doji. Jeez, thing's so volatile. So much volume on MULN. AMB's up 26%. Micro mobility up 21%. Hmm. 10 a.m. today? That was on Friday. It's Thursday? Yeah. AMC. Yeah, AMC's up 1%. GME's down 2.6. I think MULN's hit its top for now. Yeah, I'm just considering what to do with barbecue here. I'll forgive it if it just wicks out of here. Act like it never happened. Is this where it's bouncing on? Yeah. Finding some support on that resistance right there. And back here. The lines aren't perfect. It's kind of, oftentimes it's an area. With OTC though, I've noticed this thing has been, it's been almost perfect with like supports, resistances, and to the 1,000th decimal point. It's crazy. Yeah, MULN looks like it's hit a top there. Barbecue, I think we're getting the bounce here. Okay. So we have more data coming out at 9:45 in 1 minute. Then 10 o'clock. Beyond's down 6%. I've milked these calls pretty good on Beyond. There just wasn't much of a move after I opened them. One's down 3.5. SPY testing the lows of the day. New low of the day on SPY. Might be looking for a long here if we get some kind of reversal pattern, as this will have completed this inverse cup. I think this handle is still in play though. This larger cup and handle. Yeah, that's what we were saying. What, yesterday or the day before, we needed this gap fill to complete the cup or the handle. Yeah, you can see 50% is just below it, so yeah, still in play there for that. Don't know if I want to go futures or calls this early. I guess probably futures. Much is the SPY down? Almost 1%. Yeah, I'm gonna take a couple longs on the futures right there. Could be early. Still very early. We sold off on to the level that I wanted though, so that was kind of my plan. Definitely early on it. Patience. Oh, we have data too. I wasn't even thinking. That was stupid. Data did come out at 9:45, so that's where we got a little bit of a move. Then we have more in 15 minutes. Good to see barbecue bouncing. MULN just consolidating here, right around 30 cents. All that pre-market action, and the market opens, and it's just all excited, emotions are running high, and then you have to just hurry up and wait and just chill. Hoping the auction doesn't happen, we get a buyer. Baby, BBBY and baby. I did see the Mark Cuban tweet. I actually shared it on Discord. I thought that was pretty interesting. Very interesting. Saw my baby going to MULN. No, that's the opposite of what you want to do. This thing's up 76%. Barbecue's down 5%. You want to sell when it's high and buy when it's low. More dockets today? PMI. Thanks, Zumi. Appreciate it, man. I sold Pac West. Yeah, I mean, the market, like, that was a big gap down. We'll get a bounce, though, I think, this week still. That handle. And this, honestly, this could still be this handle, which would bring us back to this high and potentially breaking out of it. Just like barbecue's doing. Had me a little frightened there for a minute. That's why I shouldn't have lines. I should just have kind of an area, a highlighted area. Probably better. All in, still 30 cents, up 75%. Does Micro not have any news on this? Micro mobility? Just random any stock rally? Did it break through that support rally? 650. Could just be a false break. Looking like it's wicking out of there. I don't know. Yeah, it might be flipping that into resistance. Weeble kind of moves him around though. When I change time frames, it's just really annoying. Oh, it's still kind of showing. Wow. Had a huge move down. 650. Might just be kind of a stop loss type hunt thing though. Yeah. I maybe set up a little inverse head and shoulders here. Data in 10 minutes. Barbecue. You really mess with me today. All right, we're about 40 or 20 minutes in. Thanks guys for your likes. I appreciate it. We're 12 likes on the day. Got big gap ups, big gap downs. Volatility will ensue. Need all of the trades to get settled, form their biases and opinions, and then take money from them. MULN's, it's consolidating really well up there. GME down 2.5. Yeah, I mean you could go along with how well it's holding this range. I just not like a great entry. The scalp type entry. I'll wait for it. I need to rush things up so much. We could probably be afraid. You can set a stop if you want to close it below that level or something. BWAP's pretty low on the SPY here. Very mellow so far. Kind of waiting on this data probably. Firm's down. It's 12%. There you go, firm. Get back into that cash secured put territory. Upstart's down 10. Yeah, JH opened calls on this yesterday. I was like, man, I see a double top. Could be a cup and handle right here. But yeah, I did not think it was going to keep going. At least not before this is formed. Got to show some kind of reversal now here. It's kind of coming down here a little bit. Yeah, eyes down 9.4. Overstock down 9.2. These frothy runners. SPY's about to make a new low. The market's moving though. It looks like a small range, but it's actually moving a pretty good amount. And the volume's elevated. Door down 8.5. Run. Runs down 8. New low of the day there on SPY. I wanted this inverse head and shoulders to work. Still could. With the market bouncing, I think, today. I think should pull up some of these that gap down with the SPY. RXT down 8%. Rocket Mortgage down 8. Below the day there on SPY. Barbecue down 6.3. Peloton down 7. GME down 4. If the market bounces here. Got a head, we've got a shoulder. See if you make another shoulder. MULN's below VWAP now. Barbecue's right where I want it. True words have never been said. VPOC? You mean VWAP? VWAP right now is at 439.30 on SPY. So pretty good amount of volume, so let's pull the VWAP down with it. Why are you sad, Lords? Barbecue's completing its handle. It's beautiful. We gave you a nice little discount this morning if you've missed the handle. Always trusted you. Tupac on barbecue? What? GTOO is up 19%. For any of you guys following that one. Doesn't look too bad. Inverse head and shoulders here. Maybe a cup forming right here. Look for an entry on a handle. VPOC? Tupac? You mean VWAP? The VWAP on barbecue is, we're basically right at it now. 29.30. That white line. Alright, there's data. Eyes down a little bit. MULN flushing, yeah. MULN's at 26.20. Look for see where it finds support. 20 cents. 18 cents. Got 20 cents, 16.05, 13. I'll add some levels from what we made yesterday though. 17.66. Eyes coming down a little bit. Yeah, might get into some calls. If we make this inverse head and shoulders, a little more confirmation, I'll probably get into calls. Seems a little early to be calling for reversal, but it might take a while for that other shoulder. You might not even, yeah, maybe haven't formed the head yet. There you go. It's still coming down. Still in this downtrend. New low of the day there on SPY. $437. 78. MULN's at 26.99. Has a gap to fill down there at 17.30. New low there. 437.55. Yeah, I mean, the further it digs, the better it is for your calls. So I wouldn't be, be patient with it. As you saw, I was early with my futures. And for calls, I'm going to kind of wait for more. I'm not trying to time the inverse head. I'm more trying to catch the shoulder. But if you're trying to time the very bottom, it's hard to be consistent with that. Really, are just looking for support and resistances and just guessing it's going to bounce on a certain support or resistance. Unless you're looking for like fib levels. It could be afternoon before we start climbing back up. Just have patience. But yeah, I mean, you could get calls and just sit on them. Again, they might lose value before they gain value. The thing with the futures is I don't have time decay, so where I bought it is right when I'm back to that price, I'm break even on it. No matter when it is. So that's why if my time is not, I can kind of try to time the top or bottom more on it because you have that flexibility with it. With option contracts, you don't, because this is killing the premium on the calls. By the time it gets back to where you opened it up at, it might not be the same price. Now what I'm wondering is if this is the handle completing, if I should be getting calls for tomorrow or even Friday. Or I guess tomorrow is Friday. I love to rally on a Friday. I don't know if it'll happen that fast though. Probably not. We'll see. So end of day yesterday, my puts for today, I think we're down like 45%. So even me trying to time yesterday's high more or less, or just getting it at some point during yesterday, doesn't always work this way, but it was better off if I just waited till end of day to buy my puts, my overnight puts. I think I got them like here. It was kind of a stupid entry. I was like thinking I just want to get them, so I just got them. But that said, even if I got them up here, I think by the end of the day, they would have been cheaper. So we get a pump end of day pretty often. If you're going for puts. If you're going for calls, probably, yeah, somewhat midday the next day. Ah, new low there. Barbecue down 5.5, 29, 29, 29. One little green candle there, 27, 24. Up 60% still. Highs down 1.25. It's dropped more than I was expecting. I thought I was gonna bounce on that level, so this handle might not be might be broken here. I mean 50% is kind of a rule of thumb, like can't go past that. Depends on how deep they have to deep, or how deep they have to dig. Yeah, because it's just below 50% now. Retracement from that high. PaySafe's down 3%. AMC's down 1.2. Group is down up 0.36. Lyft is down almost 5. Peloton's down 7. Run down 8.5. See, GME's down 3.5. I like these channels I drew here. If we're gonna, GME's gonna stay bullish, I think it needs to find support on this trend here at least. Yeah. Barbecue 29.05 down 6.3. SPY still melting down. There's a little green candle on it. Bounced on 437.47. Might be setting up an engulfing candle here too. Need to be patient though. It's got got a pretty steep downtrend that it needs to break out of with maybe an inverse head and shoulders. Have a shoulder up here, maybe 438.20. We get an engulfing candle though, I might start taking some calls. Actually, no, I don't think I can. I think I can only enter once. I can X as many times as I want, but I can't keep entering into it. Morning, David. Could have held my puts longer though, that's for sure. I thought about just selling one and I just sold them both. I think I had 2. Look, what would I have gotten for those if I was patient? Oh. Oh, that actually does hurt. Yeah, they doubled in value from when I sold them. Ouch. Ouchie mama. 174 is my fill price. Right now they're at 324. Just sold one. Yeah, you don't get that like immediate kind of bounce or rip after a big sell-off. It just kind of hangs out for a bit. Kind of a good sign for it to continue down. I was saying that it opened, but any little green candle wiped premium so quickly on dailies. Oh, it was okay. I was up well over 100% on those. Yeah, I think those were like 300% actually. 74, what did I get those for? Yeah, I was over 100% on them. So, yeah. Could have sold one, made it free, and then just held one. Great strat. And your SPY calls. All right, Jay sold. Well done. Actually, yeah, you got an engulfing candle there. So, could still take some time, but Yeah, I like that 5-minute engulfing candle. Might jump into some calls too. Didn't realize that candle actually closed green. That's good. Alright, I got some dailies. A little early, probably, but I'll do it. I'll run them with you, J Souls. I got 440s on the daily. So I'll probably sell off a couple at VWAP. And then ride a couple more. See if we can start closing some gaps and stuff. But yeah, you've got a nice engulfing candle there in the 5-minute. Data is all out, I believe. Need a little bit more of a pump right here to hold the right shoulder on this inverse head and shoulders. Fix is on a mission. Barbecue, little green candle there. MULN's still kind of selling off. Still early. 10:15. This reversal could take a long time. Nice, C-Man. Well done, dude. Yeah. If you like it, could scale in. I don't see any signs of reversal yet. So you're just kind of dip buying on a stock that's up 54% overnight. That happens to me often, getting back into a play too early after I've gotten out of. Just thinking that money burns a hole in my pocket and I have to get back into it. Sometimes I miss because I don't get back in soon enough, but like there's many times where I get back in and it's like days, a week later where I'm like, why didn't I wait? That week later is when it got better and everything settled down. I remember, oh yeah, I'm supposed to buy when it's boring and sell when it's exciting. Even if I sell when it's exciting, doesn't mean I can just buy back in when it's still exciting. But it all depends on your plan. You could scalp MULN for 5-6% probably intraday pretty easily. Open doors down 7.8. R's down 4. Upstart's down 9. Base is down 7. I don't want to run some cash secured puts on space. Would be one of my sketchier ones, but premiums are pretty good. They're not pre-revenue. I mean, they have revenue. Losing money. Spike him down a little bit. Missed the top pop. What do you mean? You're gonna sell again? You're right near the lows. Are you day trading it? just showing support on that 7. Just nice. MULN coming down. 48% now. BBBYQ up a little bit. Go BBBYQ. Buy still weak. Head engulfing candle, but it's not breaking out of that trend or that range. See if this little head and shoulders flushes through, or if we bounce here, creating a bottom. Trend could be starting to slow down from this steep decline to more of this. There's a little flush on SPY. Maybe it's a new low. I might start trading next day contracts, just because then I can continue to buy into them and scale into them. I don't have to sell them all. Well, I don't always have a continuation. Curious if that holds on space. I had a new low on the day there. Yeah, MULN down to 24 cents. Not like the strikes on MULN or on space. Barbecue back to 30 cents. 30.01. Down 3.2. Buy setting up a little wedge down here. If it breaks to the upside. Finding a floor though, it looks like. Yep, MULN 25 cents. It's up 46%. And for 20 cents next. And if that fails to hold, probably a gap fill. 1760, maybe 1730. Barbecue, green candle up there, 30.36. It's only down 2.1% now. You almost had me, barbecue. Very bad man, barbecue. It looks like it's starting to slow down its descent. Elva? Sail the boat? I don't think so. I mean, I think it might not be another few days or a week before another good entry, but them going after naked shorts, it's definitely a catalyst that could keep on giving. What the heck is this? Reverse split squeezer? What happened to this thing pre-market? At the split? Launches reverse stock split and plans for a NASDAQ listing. Is this another company? Outstanding common stock, a ratio of 1 consolidated for 5 pre-consolidated shares. Ever increasing regulation for crypto, my opinion. I mean, kind of the point of it is to be decentralized, right? So they can try and regulate it, but as long as it stays decentralized, it doesn't really matter. Buy puts? I'm not getting any puts here. Unless if you're just planning to scalp them. Given that the market's down 1.25%, which is pretty substantial, and it's now flattening out. But you could get a put, and we might see a new low, little flush if you in and out of it, maybe like a minute or something. Crypto should ever increase regulation? No, I'm not for regulation. I'm for self-regulation. People should be regulating themselves. I have no belief in somebody else regulating me. But I do think people should have self-regulation. Jet ski dispute? That's crazy. Yeah, you're gonna start seeing media's gonna be picking up on all sorts of whatever little nuggets they can find with gun stories now. Now that they have constitutional carry in Florida, as it's always been with the media, you won't see all the stories where the store owner, the old retired vet, saved a man or saved a store owner from a robbery or this or that because they had a gun. But yeah, I imagine we'll see a lot of A lot of little stories coming out around how evil this law is in Florida. This is like a movie. Starting forth, yeah. I imagine. Let's see if Spy breaks this low. Kind of wedging, kind of bear flagging. Seems like it might flushy flush. New low of the day there on Spy. Flushy, flushy, flush. MULN 35. 35%. 23 cents now. And for 20 cents. 1766. Dude, this meltdown on Spy should have held us puts longer. Oh well. Gotta take what you can get with a gap down of what, 0.7%. That's pretty good. I like it. Get him on the way back up. I don't see anything they're talking about us and RC Teddy. Mark and I watch CNBC. $10.40. We've got what, 50 minutes till EU close. Thank you guys for your support this morning. We're at 18 likes on the day. Pretty freaking awful, but I am still grateful for those of you that continue to support. Spy's still flushing down here, and it's not seen a reversal yet. Yeah, I think you did miss the window, Ace. Appreciate it, man. Better luck tomorrow, I guess. I guess once the contracts are that far in the money, it's not quite as much of a rush to try and dump them. Something I have to remember also. There were what, 440s? Yeah, so we opened up pretty deep in the money on those. They're gonna fluctuate, but being in the money, it's not as much. Pulling back into MULN. All right, man. Have a plan. Where are you gonna sell it? Where are you gonna buy more in? Like if it comes down a certain amount, you're gonna sell it. If it goes up a certain amount, you're gonna sell it or add to it. Do it. Thanks, Buzzin'. Firm's down 14%. Any news on this? Piper Sandler turns bearish. Yeah, I mean, it's moving intraday big enough, MULN, that you can, for day trading or scalping, I mean, you can get, you know, a few points here, a few points there for sure. Easily. Could have a move back up to VWAP too. It is kind of bouncing on this pre-market level. This is where it sold off to before the pump from the share buyback. I may be getting a green candle here with a wick on the downside. That we're starting to reverse ever so slowly. Could have gotten 40% more calls with a bit more patience. But we did see, we had an engulfing candle. Didn't really wait for the pattern, just went on engulfing candle, which is why I don't try and just trade candles, but I do try and use candles to grab an entry and exit on stuff. But it really should have been a engulfing candle on like a shoulder. I want to be even more safe. Yeah, MULN moving up a little bit. Got VWAP at 2761, which is, that's 12.25% from here. So not bad. SPY starting to climb up. VWAP on SPY is 438.83. Come down quite a bit as the volume is pretty high today. Yeah, look at the volume today compared to the last 2 days. First hour. He's down 3.2. Well, SPY might be melting some more. It's slowing, but ever so slowly is it slowing. 4-hour chart, nice bull flag. Yep, it looks good, man. I'm stoked on barbecue this morning. Even the little adrenaline rush it gave me. Yeah, there you go. Bull flag. This is just the end of the cup and handle. Zoom out a little bit. Your cup. Here's your handle. Retrace just over 50%. Now we're grinding back up to I think a 357 test conservatively, and break that 380.79, and you know, keep on going. I think the next big spot will be that 56 level, or then it could be making even a bigger cup and handle. So yeah, break above these levels. I think 56 is next. Yeah, it is looking good. This morning I was pretty set on 2902, which I shouldn't have been that rigid on my numbers. That was here, which is, it's actually moved, but and then it dropped below it. I'm like, oh. Then I looked back and I found resistance here, which is kind of what it bounced on. That's also resistance back here. So, whew, almost had me closing out. But yeah, the handle still looks good to me. And that bull flag, as you mentioned. Very nice. $24.02, owns up 40%. It's kind of bouncing a little bit on pre-market low, I guess. Not really, but support from pre-market. See this borrow fee on barbecue. So was that 130? Okay, still at 130% borrow fee. Looks like it's flattening out here. The reversal? Maybe. Double doji candle is a good sign. 150% or 130% borrow fee, 150,000 on iBorrow. It's still updating, so they're still available. We'll see if they stop updating today. Oh, SPY. This might be the shoulder here. We might need one last little flush to get ahead. All in 44, 45%. It's climbing back for VWAP. Reaching for it. I don't think the Dumb Money movie will be a catalyst. Friday pizza party, huh? Starting it early? Thursday. Someone's in trouble. Not aggressive. I have a mechanical keyboard, so everything sounds aggressive. I come into the low of the day. I think these SPY calls will work today, but for entry. 49% on MULN. Still has a little bit to go for VWAP. Oh, SPY just made a new low there. What a meltdown. Those puts haven't increased in value really from when I checked them back here. This is just burning theta. Barbecue's doing fine, Lords. It's doing good. It's holding above that level. It's on its way up. Making a nice handle. See y'all next week. Maybe. Today and tomorrow, I think we still could rally. Any day, really. I just expect us to start going. Fine, new low there. Those premiums moved a little bit more. Yeah, one last little flush here. Get all the bulls out. I've noticed housing is starting to come down quite a bit actually. I've actually seen houses sold for close to the prices they were pre-COVID. So I think the next 6 to 12 months should start seeing some pretty good deals, or potentially. But the only concern is that it's not just gonna rally. The housing market might be pretty stagnant for a bit. Why so bullish? Just because the chart is a cup and handle. They have an inverse head and shoulders here. So cup and handles, they retrace back to the high of the cup at the very least, and usually a move past the high. So that's why I'm bullish. It's held that trend quite cleanly. Even see this little trend we got from here. Don't worry, once we get to here and it starts reversing, I'll be bearish again, or here and it starts reversing. Or here. 56 cents, I'll probably be closing back out. But I don't want to jump the gun on it. Reserve rest. Yeah, TA. Yeah, as far as filings, that kind of thing, I mean, I'm not bearish on that stuff either. Like, seems like everything's going fine. The nulls having to be included, like what Cameron was saying, for them to, or yeah, shareholder value retention only happening with the nulls. Can't remember exactly how to word it, but that seems like a pretty big deal. Pretty big assurance for shareholders, because that's a very advantageous part of this purchase for someone, would be that huge tax write-off. You know, for most purchasing something like this, that's as good as cash almost. They have huge tax obligations, so you know, penny saved is a penny earned, and they'd have to pay it on taxes, or they get it as a write-off. So it's as good as money, pretty much. My TA. I almost flipped today though, Lords. Don't worry, I almost flipped bearish. If we didn't hold at this level, I would have had to reassess everything. Get the SPY on its melt mission. You're a day ahead of me. You were bearish yesterday. I'm just for today. How long was your bearishness lasting? Yesterday was nice, but today's almost more nice for me as far as bullishness because it's reconfirming this as a support. So it's just ripping up. Doesn't mean much. I want to trade based on what the charts show, and if I can anticipate what it's going to do before it happens, that's what I'm trying to do. And just practice risk management. If it fails, be ready to change that, but be prepared if it does not fail and it succeeds. All right, Spy, let's see if you can do it. View ups kind of stayed kind of high now here for a lot of this melting. MACD's flipped. Definitely starting to round. At the gap, yeah. I'm not gonna be too anxious to get into this back in. I sold this morning actually pre-market at that 30-cent double top. It was a very small position, so it's not like I made a lot on it, but happy with that sell still. And yeah, gap fill could be good. Could take time. Probability media looks great because it's 0.0001. Buy it. I go to 0.0002. Life clips, another 0.0001. You're thinking it dumped to 25 cents, then 18 cents? On barbecue? 5 cents, then 18 cents. Yeah, I mean, like if it breaks this support, then I could be on board with you there. Yeah, I could see 18 being the support, 17.90 being the next spot it hits. But I think we're gonna test this high before we do that, at the very least. 35.70. Okay, SPY. And if we test there and it breaks through, and you know we going up to 46 cents or 50 cents, then I don't think that 18 cents is on the table anymore. And really, even if we test here and come down, still probably don't think 18 cents. So we'd have to break this support, in my opinion, according to what I'm looking at. A failed cup and handle. Failed inverse head and shoulders. Boned. Oh, Barnes and Noble. I've never looked at their ticker. Oh, things had a rally. Why haven't they had earnings? Maybe they had earnings. Statement of change in beneficial ownership of securities? What's going on with Barnes and Noble? I like Barnes and Noble. A lot of memories, Barnes and Noble. I've frequented their stores many a times in the past. It's kind of funny how that happens. I'm not like a big reader or anything. It was a nice, cool place to hang out. Like actually cool, you know. AC, you had books, magazines, you had a Starbucks in there, you had Wi-Fi. At different times in my life, I'd have to go in there, use their Wi-Fi. Different trips. Living in an RV, I had to do it at times. Being a gypsy. And as a kid, I remember going there, reading snowboard magazines. Barnes and Noble, man. Not nice place to chill. Got comfortable chairs. Should buy some Barnes and Noble. Rumors? What are the rampant rumors? If I knew how to weed. They have picture books too. No, I'm retired from snowboarding. Done. No desire to snowboard anymore either. MULN's coming back down. Give me a guess on Barnes and Noble rumor. It's somehow tied in with Bed Bath and Beyond. Something that's actually causing this price action? What? That's not what it's rallying on, though. Jeez. You guys on Reddit. You think that's what's causing this rally? I look at Ortex sometimes, but no, I don't. You can't hold those FTD dates down to a day. We've learned this with GME after years. All the settlement dates, all the extensions. It's no, you did the right thing passing Cloud. It had a big rally yesterday. That was good. What you could have done different, that would have been more prudent, would be just to scale, not sell them all. You know, sell like half yesterday just in case there's another rally. But see, it's down now. Who's to say you would have timed it this morning? Maybe you would have waited till now to sell it. You would have gotten way less. SPY, new low on the day there. We're on Reg Show, exactly. Like, yeah, the whole Reg Show thing. I mean, there's FTDs and, oh, it's going to rally because of this day. Like, no. You would see a rally on it, and then the FTD people would say, oh, it's because of all these FTDs today. It's like, okay. And then other days when there's supposed to be FTDs that were supposed to be delivered, it didn't rally. It was like, oh, it's because of T+2 and settlement and seems like a lot of the guys I hear on the PP show, like, or even in barbecue in general, are they're maybe into GME, but they haven't been into it for years. And if they are, they're not that heavy into barbecue, or at least sharing their opinion, because it's like it's like this stock right here, this same wave of like hype on FTDs and reg show and all these things, and swaps and rollovers, and I think it was real on GME, but you're seeing that right now with barbecue, like, and you've seen it for a bit, but then you have all this of just like disappointment because it keeps failing. So I think the barbecue people, some of them are still on this kind of thinking that all this, you can nail it down to this day on FTDs or whatever. I think the borrow fee is important. I think FTDs are important, but to try and nail down like a day it's going to rally because of this, I think is prudent. But why is Barnes & Noble ripping? Said RC, there's RC speculation because of crime. Yes, that's what we resort to, crime. If we don't rip on an FTD delivery day, just crime. They have options. MULN 25%. They'll fill in this gap here. Closer to 20 cents. Grumpkin, care to share the reason for Barnes & Noble rip? Or what is the supposed reason? Or what you think is the reason? I can't imagine this is from Reddit. Oh, they had earnings yesterday? Weeble's earnings has been jacked up lately. Like when they've announced it. I don't think they've had earnings yet. What is going on with it though? $25%. About RC buying Barnes & Noble? Why the heck would you want to buy another failing brick and mortar store? To turn it around and crush Amazon, of course. Last question, just follow up. Some questions. No, I mean, yeah, the chart. I mean, like a catalyst, but I don't need it. I don't think I'm gonna jump in right now, but I'm gonna keep an eye on it. Nice volume too. Position will show. Market maker create a gap whenever they want. They will stop the billion volume run. Yeah, Market maker's the one that made that billion volume run. They're the market makers. Amazon was a bookstore. Yes. What better way to get Bezos than to buy a bookstore and get them? All coming for full circle now. Retirement and work for RC. Yes, this is the way. He took over Furlong's job. All right, guys. We got EU close in 10 minutes. Still struggling on our likes. A little sluggish today on this lovely Thursday. But I appreciate you. 27 likes. If you haven't subscribed, do that as well. That red button. You can't read. You're low of the day there on SPY. We're down 1.35%. Another new low of the day. Calls are bleeding. I moved to VWAP and I might just be break even on them. $22.50 on MULN. Patience.
Over to Datadog, which the last few months have been extraordinary. I looked and I saw the last 6 months up over 30%. And when we look at these charts, you guys tell me, Joel, your thoughts on Datadog.
Yeah, I mean, we see that they're, going back near that April-ish area. There's massive run up to about 90, and then even once it hit 90, kind of chopped around and then exploded up to like near that 104 and change level. And since then, we've kind of been stuck really in a bit of a range and consolidation between, looking at the chart, probably roughly about 91-ish to right around about 100 or so, maybe a little bit higher. And because of that, I want to say that right now, I'm more thinking that we chop around in this range. We would have to either break to the upside above 105s or even break to the downside below 90 before I think new trend is confirmed. And because of that, I'm neutral as far as direction goes.
All right. And tell me your thoughts, Ben, as you take a look at this chart.
Joel and I have a similar read on this one. Again, Nicole, it looks like I noticed first and foremost Joel described it as explosion to the upside. We saw that in the beginning of May, right? And then a little bit more sideways consolidation since. But let's just begin first and foremost with the move that we saw, or sideways consolidation we saw throughout the month of March and April. And then again, here is that big move to the upside. You can see the conviction, you can see the breakout tendency, and how we transition from that horizontal into the vertical phase, higher highs and higher lows, the market seeking value to the upside. And what happens after topping out around that 104 area? Joel mentioned we found that balancing 90 to that 104 area-ish. And so right now, I just went ahead and identified these areas of consolidation. You can see them on the hourly candle chart, pretty well defined. We're balancing around 96. Now, this move up actually, again, much like AI, invalidated a longer-term trend to the downside. Let's take a look at that longer-term trend to the downside, and here you can see the invalidation of, because we had areas of value that were forming in lower and lower levels, 148, 97, and as we're forming 75, the working assumption is that we're going to see a new area of value form at a lower level, right? If we're truly trending to the downside, but instead, look what happened. We worked our way right up into this 97 level.
Oh, that's how you invest.
Up and through it to 100. I think that designates invalidation thereof in terms of that key area. So it could chop.
Yeah, MULN's getting close to that gap fill.
Buy signal at this point, but you just lose.
You can imagine Bed Bath & Beyond. It's like, did you ever see that Dave Chappelle where you, I mean, it looks different than that, but the Dave Chappelle where the internet is a place. It's not like that show, but it is like if the internet was a place where it's just like products and ads everywhere. It's pretty organized, but there's like such a full store with so much random stuff, just like knickknacks and like, yeah.
Your final thoughts here.
Absolutely, I agree with Ben.
And I think that was part of the reason why they started to decline, is because they just started doing all these private label brands and kind of lost the customer that wanted more well-known brands in there, and I don't know, just got cluttered with stuff almost. I've seen on TV the slap in job. I haven't seen that Chappelle in so long, but I remember it. It's a funny one.
Or we break that 104, 105 area to the upside. So my theory is that we chop in this range that we've identified as they're building value right here, and there's an auction, and anytime there's an auction, buyers or sellers are looking to gain control of trend, and I think that's what Datadog is going through at the moment on the charts.
Yeah. All right. And last but not least, I know you have a bearish vertical here. When you're looking at AMD, which is trading at around 111, has had a run up this year of more than 70%. Your thoughts on that?
Absolutely. I think AMD, I mean, we saw, I think if we go back to AMD, one of their recent bigger moves took place when NVIDIA just crushed.
The market's sold off quite a bit from open even.
A major move in AMD.
Yeah, it's doubled its move, which is kind of crazy.
Since then, what we've seen is possibly profit taking
from the gap.
Possibly people
almost
kind of, maybe allocating funds elsewhere, and AMD has not performed that great since then.
This gap fill might not happen until tomorrow.
Well. Because that is sitting right around 111, I do think that there may be some more weakness to the downside. But in the event that there is not, I think some of the previous swing highs will act as short-term resistance.
Okay. Ben, your thoughts on this one as you take a look at that chart, final chart.
Joel, we're 3 for 3 today. Joel just mentioned 111. I've got my eye on 112.
AMC's flat, trying to go green.
But I wanted to begin first and foremost just the
Droop is up 2.5 now.
Over the last few weeks.
Interesting.
You can see we topped out around 133. Joel mentioned after
looks like it might be climbing. We'll see.
Things have not really gone
really needed to like hold 437 as support.
Consolidation, 3 of them that have formed at lower and lower levels, currently balancing around this 112, 111 area. I don't want to split hairs necessarily, but
Peloton down almost 10.
Moving lower after failed auction up to that 133.74 level. Look at that failed auction. Took out the highs that we saw.
We're on down 10.5.
End of May, so beginning of June, we're able to take out that key level here, but unable to see follow through. Look what's happened. Reversed since, and right back to a key area around 160. This is potentially reversing a longer-term trend that we've been seeing to the upside here. So again, that bearish narrative, should we open up the door to the downside, really take out 106 with conviction here right now, targeting 96, 95-ish, and again, potentially building momentum lower. Also, if we were to take out this 50-day moving average here, I think we could add to some of that momentum lower. Ultimately, you've got the 200-day moving average well below, down around 83.
Keep your hands up. Strong predictions last night.
Really
That one guy was just talking about FTDs and all hyped. I see it's an uptrend. I mean, I'm fully long on it, so as long as it doesn't fall below the low of today, then I'll be closing out if it does that. But if we can hold that, I think today, tomorrow, next week, we'll be back up at 35.70 conservatively. 3879. That breaks.
You're
Yeah.
absolutely right, Nicole.
I think we're in uptrend. So
like a book, if you would. I think that right now there's a bit of caution. VIX is up, trading near 17. We've seen here going into this kind of shortened week, there was a lot of consolidation at higher prices in SPX, where maybe the market is just really taking a pause, if you would. And if that happens, I think there will be even more caution, more protection to come. And so that's kind of where I'm looking to just kind of be protecting, stick my toe in the water on some shorts and see if I can pick up some premium here and protect myself simultaneously.
Yeah, understood. I mean, I think you make a good point about the VIX, too, because we've been watching 13, 14, and look at Pop Tire today. Joel Hawthorne, thank you. TheMorningSnapshot.com and our own Ben Lichtenstein on the charts for the VIX today. Thank you both. A few great names, AI, Datadog, and AMD. Coming up next, we're going to spotlight the rebound of 2023 that we've been seeing as investors have turned to growth over value. Now what? Where are the opportunities? Where do they exist? Trading 360. We'll be right back. Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange.
there you go, Spy.
Here at the
Boy.
mornings, every single sector is in the red. I just checked a moment ago, all 11 with a down arrow. Energy, materials, industrials, the worst of the bunch. This as the VIX is jumping today, just like Joel Hawthorne brought to our attention. It's at 1694. That being said, the S&P's down 1.3% at 4389. The Dow down 1.4%, losing nearly 500 points at this moment, 33,800. The Nasdaq down 200 points, 14,997. That's 1.3% as well. But look at those small caps. They've been doing better. Now they're outpacing on the downside. Now they're outpacing to the tune of about 2.5% lower. Now for a look at developing stories this morning, I'd like to bring in Kevin Green, senior markets correspondent, to talk about
dude, these calls are not moving.
Debut of the Twitter rival Threads, which
Too
is
soon,
getting a
Junior.
really good reception thus far. Kevin, your thoughts?
And Nicole, we are seeing a lot of chatter when it comes to Threads. It did launch yesterday, and we actually just got an update from CEO Mark Zuckerberg that they actually surpassed over 30 million signups since they launched the platform. Now, yesterday, we actually did see around 10 million signups in the first 7 hours. So we continue to see this momentum when it comes to this platform here. And today, earlier in the session, Meta was actually in the green while the broader market was in the red. Right now, we are seeing it at the flat line, slightly negative, if you will, trading off some intraday support levels at that $293 level here. What's going to be very interesting, we are getting obviously some context on this new platform, but we'll probably get further data as we see their earnings announcement on July 26th. We want to be able to see how many new users are coming to Facebook/Instagram/Threads compared to those that are already on Instagram that are now on this new platform. And then obviously we want to get an update on when they will offer advertising. As of right now, executives are saying that they will not offer ads until they fully scale up the platform. But once again, I mean, at the end of the day, Facebook and Instagram have been cash cows when it comes to the ad service, and they have been able to monetize their business fairly well, and they're hoping to do the same thing when it comes to Threads. And I mean, Nicole, I looked at it for briefly.
That's tomorrow for sure.
Very interesting. There's a lot of similarities between Twitter and this new Threads platform, but it is missing a couple of items when it comes to functionality. But overall, we are continuing to see this back and forth between Mark Zuckerberg and Elon Musk. Let's see if this is going to actually take a considerable amount of market share away from Twitter, or if this is just going to be something that fizzles out in a couple of months from now.
Right. All right. Kevin Green, thanks so much. Appreciate it. Senior markets correspondent. Good look at an important story. Everybody's talking about Meta today. Thanks. It's time to spotlight growth rebound that we have seen in 2023. And now what? Dan Lefkowitz is with us, strategist for Morningstar's Index Group. Thank you for being with us. So after 2022, you left investors very wary. I mean, you had equities, bonds, and
have you tried putting even more money in?
It's tough to make a buck, right? And now growth really has shined. You have a few key points here about the rebound that we've seen in 2023. You know, why did this happen? Trouncing value in 2023. Why did that happen? And what did you see?
Well, Nicole, it's really incredible to think back to last year when, as you said, we saw a bear market for equities, and the growth side of the market really bore the brunt of the pain, right? Our broad growth index was down 32% last year. Our value index was only down 7% in 2022. And the dominant narrative last year was that rising interest rates were hurting growth stocks disproportionately because they were devaluing their long-dated cash flows. Growth stocks were essentially a long-dated asset. Growth stocks, as you said, have rebounded really dramatically in 2023.
All right, SPY's coming back up here a bit.
A long shot, despite the fact that we've seen several rate hikes this year. So that narrative, I think, has been a little bit discredited. As you've been covering today, and as you've been covering all year, AI has really been a powerful catalyst for the growth side of the market. Anything associated with AI, from NVIDIA, you mentioned earlier, and AMD, who are semiconductor suppliers of picks and shovels, if you will, to the AI gold rush. And then you've got companies like Microsoft and Alphabet that are all perceived beneficiaries of this AI trend. And meanwhile, the value side of the market this year has really been held back by financial
Dude, these calls aren't moving at all.
We had the bank failures earlier this year. The energy sector has been weak, and energy
Crazy.
was the best performing equity sector last year.
Another problem with buying so early.
That was in positive territory.
Just you're paying a premium in that first hour,
on the value side of the market have
or 2 hours even.
Well. So it's been a narrow market, but certainly the growth over value dynamic is.
I could have waited until now to get the calls, and I would have gotten them for half off. That's crazy.
Yeah, as you talk about this narrow market and the market cap,
I usually don't get options until
and we have seen
later in
folks
the day.
moving to the S&P, right? There's different ETFs and how they're weighted, but the point here also is we have a rising rate environment, and that could really hit growth overall. I mean, even today, as there's talk about rate hikes, you're seeing AI and growth taking a breather.
Yeah, I think we have to be a little bit careful about what does well in different rate environments. You know, I was always taught that dividend stocks did poorly when rates went up because rising rates make bonds and cash more attractive from an income perspective relative to dividends. But dividends were held up relatively well last year, despite 5 percentage points higher interest rates over the course of the year. This year, we've seen banks do poorly in a rising rate environment. I was taught that rising rates are good for banks. So I think the relationship between interest rates and different kinds of stocks is not always as predictable as we like to think.
Understood. Tell me about the caution that's needed.
Yeah, so as you said, it's been a really narrow market. You know, it's hard to believe. I looked up yesterday when that FANG acronym was coined.
MULN's still filling the gap.
About a small cohort of tech-related stocks leading the market since 2013. Of course, it's expanded and it's morphed a little bit, but
Kramer says he started that phrase.
Here's the Magnificent Seven stocks that are responsible for 3/4 of the U.S. equity market's gain this year. Our Morningstar U.S. Market Index is up about 16.5% this year. Those 7 stocks are responsible for 3/4 of it. So as you said, it's been a really narrow market. Not only has growth outperformed value, but it's really large growth has been where the action's at. Small caps, mid caps have lagged. A couple of our dividend indexes are in negative territory this year. If you think about things from a factor perspective, low volatility has underperformed. Momentum has underperformed because momentum loads up on what's done well lately. So momentum was buying energy and dumping tech coming into 2023, which, so it got whipsawed when there was the market reversal. But in terms of caution, we think that after this run up that we've seen, the technology sector in aggregate is overvalued at this point. That's based on our Morningstar equity research, their stock level price to fair value estimates. So they see NVIDIA as trading at a premium to its fair value at the moment. Apple is in overvalued territory.
Whoa,
Microsoft
weird wick on Dish.
We just spoke about, we think are both in fair value range. So we see the technology sector, we see the growth side of the market as overvalued, and we see
AMC's green.
Elsewhere in the equity market.
GME's down 3.3.
And then when we talk about something like small caps, I know you have international on there as well, but small caps, sometimes when the market's doing well, small caps do even better. Today the market's pulling back, small caps are pulling back even
Dude,
more.
Ace.
It's a little more volatile,
Like,
that no doubt.
Teared from that, what you said, man. That was hilarious.
Yeah, so on the small cap side, I think small cap land has been held back by financial
438 is expiring, definitely not moving. No, yeah, this is way too slow of a move. Need some volatility to the upside.
If you look at our wide moat focus index, which is
I don't think my premiums have moved much at all.
Equity analysts think have moats or competitive advantages around their businesses and that are trading at compelling valuations. There are a number of smaller cap names across economic.
Need a break for EWAP.
They like Etsy is one of them that springs to mind. Guidewire,
Fill that
Viva,
gap.
those are all small caps that they think are trading at attractive valuations.
I like futures though.
Advantaged.
So my futures, where I open right here, even calls down 60%.
Large caps for years and years now, going back really to the financial crisis, as has international.
Just a testament to
global diversification,
not opening
really
options when it's exciting.
Investors for a long time,
or too early.
We just put out some research recently that
in the day.
said that the U.S. equity market looks.
That's another reason why I closed it so early, because
top heavy
premiums are higher, but it did melt down, so it didn't work as well.
Been on a long run of strength. There are lots of great companies trading at compelling valuations that are based overseas. It seems like a time like you want to be broadly diversified, you want to have global exposure.
All right, Dan, thank you. Dan Lefkowitz, thank you, strategist with Morningstar's Index Group. All right, coming up next, we have a CEO frenzy, the CEO of LifeZone Metals, the EV battery supply chain that began trading here today at the New York Stock Exchange, and Go Green Investments also a part of this picture coming up.
Wayfair. Wayfair down 10. Overstock down 9.2. Peloton down 9. Back West down 8. What's IEP doing? IEP is pretty much flat. Barbecue 29.70. Down 4.2. Might get a Friday pump. Again today, rallying to close. Maybe one of those days. MULN still melting. Yeah, it's like it's broken. Is this lagging? Yeah, like these spy calls have not changed at all in the last 10 minutes. Oh, E-Trade might be tripping out. Oh. It changed a tiny bit. Turka's up 7%. Wow, with a green to red candle there. Well, they change their white balance or something. Everybody's so red.
So we wanted to do a SPAC in a way that was different than what a lot of other SPACs have done.
Right.
So we tried to buy this. We wanted a company with a clear.
Starting to get a little volatility here.
Has control of one of the largest, highest grade, undeveloped nickel sulfide.
MULN's still coming down.
There's a very clear valuation support to it, in the sense that BHP has invested $100 million in 3 different investments over the past 2 years into Lifezone Metals and its subsidiary. And the company has a technology portfolio for clean processing of metals that I think is unique and necessary for the EV transition to move forward.
Right, and so I know you have sorry, finish your thought.
Go ahead. But we wanted to bring something with a clear valuation support and hard assets with the optionality for the future at the right valuation.
Right, understood. And I know that you have an energy background. I was reading the bios, and so this is right in your wheelhouse, they say, as we talk about the transition of what's happening from energy to the future. And that brings me to what you are providing is in this EV battery supply chain, some of these undeveloped materials like nickel sulfide. And I also think about what happens here at home versus abroad, the dependencies. There's just not enough materials, right?
Yeah.
Where do we stand on that, and what do you hope to accomplish?
I think for us, I mean, what we like to, I guess articulate is we're providing solutions to the market. And when you look at the daunting challenge of supplying enough material for this massive, revolution, to electrifying, the economy in the next step. I mean, what we're doing is we're providing, importantly, the technology to do that in a clean way. So the OEMs, the battery manufacturers, there's going to be massive requirements for them to do this in a green way to meet those lower CO2 standards and to meet their targets of reduction in 2030, 2050. Typically, smelting is the dirtiest step in the supply chain, and what we do with our technology, we replace smelting. So we're helping mining companies extract in a cleaner method.
Right.
But we're also, combined with that, we are, as John alluded to, we are unlocking the next significant source of nickel and cobalt, and we're doing that in Tanzania.
And a presence there at the G7 as well. Just a quick, so people have the global picture on what it is that the other countries are looking to you for.
Yeah, I think what you're seeing is you're seeing the U.S. and the other G7 countries, really commit to, they have the big global infrastructure initiative, and so to combine jointly to ensure that there is infrastructure support, funding support, to unlock the next kind of critical supply chain locations around the world. And I think Tanzania is really well positioned as a hub in East Africa to be able to build out the infrastructure to access some of these additional deposits that are going to be needed to really come online in order to satisfy the global demand.
And John, at this point now, I mean, you've had sort of, when you look at your past and your so many years and thousands of meetings and deals, and a best performing SPAC. How do you do it? What are some of the hurdles that you've been overcoming just recently? I mean, much like many in your industry have to face, but that you're looking to attend to in the next 6 to 8 months.
So we've had a really good team, and we've had a lot of help from a lot of different people. On a go-forward basis, I think there's demand for a Go Green too, right? There's demand for more investments into clean energy. There's demand for more partnership. Really, that's what this is.
When you think about what the administration is hoping to do, where do we stand? And without talking about politics so much, but more about what governments here at home and abroad do to help the growth in this way.
Well, we were fortunate when Vice President Harris went on the state visit to Tanzania. We were invited, and so I was able to participate in the state dinner, and that's a big demonstration of how serious the administration is taking security of supply chain. So reaching out to Tanzania, strengthening that relationship, you're seeing the evidence of that right now play out. From that visit, President Hassan from Tanzania came last year to visit Vice President Harris. So this is it's very supportive of us. We do get a lot of support from the U.S. government, and the fact that they are, supporting Tanzania to, whether it's supporting infrastructure build out or additional investments in the country, facilities, finance. I mean, these are all things that are really putting Tanzania in a great spot to kind of be that hub in East Africa to access additional sources of clean metals.
And having been at that state dinner, when you lay the groundwork of what it is that you're doing and what you need going forward, just a quick thought on the EV market. Either one of you can comment when we think about Tesla as a real dominant leader, but all the other makers here at home in China. Thoughts on how the group is growing? Any specific names that you're working with or talking to?
Well, I think where we are right now, so Lifezone Metals, so we are partnered with BHP. So this is BHP's first foray to come back in Africa, which is a big endorsement for us as a project. In that partnership, we control 40% of the offtake. So we as Lifezone are able to go out and identify who we want to provide this metal to. And so we're in a formal process right now with our investment bankers engaging with the auto manufacturers to basically place that metal with them. So that's that's a process that's underway. But I think the big thing about Kabanga and our project is we are going to be some of the lowest CO2 per ton nickel and cobalt in the world. So we're going to be highly sought after. So it's going to be a highly competitive process, and we're seeing that right now.
Yeah, no doubt. We are seeing that right now. Thank you both for being here, and come back soon with some updates for us. We want to hear how you're doing. Thank you both. Glad you're both here. Chris Showalter, CEO of Lifezone Metals, and John Dowd, CEO of Go Green Investments. All right, let's turn our attention straight over to what we are watching closely, and that is all about the labor market. And for that, we head right over to our panel. We're talking with Rob Nance, CEO, One Advisory, and Sam Stovall, Chief Investment Strategist at CFRA. Thank you both for being here. Look at that ADP print. Wow, right? More than double what was expected today. Really shows the resiliency of our employment that is occurring. Rob, your thoughts?
Yeah, I think, the ADP data blew expectations out of the water today. I think that, it's probably overstated, but it's a clear signal that the economy is strong and that, we're not seeing anything like a recession.
And Sam, your thoughts on the jobs report that we got, the ADP part of it?
Hey, Nicole. Well, I think Rob is correct that showing that recession is something that's not likely to be happening in 2023, maybe 2024. But now the eyes are focused on Friday's payroll report, and there could be a risk that instead of coming down from the 300 plus number to in the mid 200s, maybe something above that. And the question is, do we actually see the unemployment rate remain at 3.7%? So I think investors are looking at this data and then also trying to decide whether the Fed will go beyond the July meeting in order to be continuing to raise rates.
Right. Well, we'll wait on that CPI and PPI next week. Rob, what do you think? What do we really think the Fed's going to do?
Yeah, I think this is a clear signal that we'll probably see another 100 basis point of rate hikes before the end of the year. I mean, we've seen consumers largely insensitive so far to interest rate changes. I'd say the Fed's work probably isn't done.
They're pricing, I think,
we
50.
Get up to 100 basis points of hikes before the end of the year.
What do you think of that, Sam? 100 basis points. I mean, there's no doubt that we're hearing a lot of Fed speak this week.
You holding your calls, Yen? What are you going to do?
There were folks in the meeting who thought they should have raised in June. They did not. 100 basis points. What do you really think happens here, Sam?
The lock's down 7. Where are you? Where are you, Al?
We think that's a bit higher than what we are projecting. So our feeling is that, yes, we'll have the hike 25 basis
This thing's got way too high beta. It's so sensitive to the market.
That we have another one maybe in August or September.
No news.
But we're not ready just yet to go the full 100 basis points. That certainly would be a concern, and I think would put additional pressure not only on
Zoom's down 4.5.
but also on the stock market. And cause, in a sense, history to be embarrassed.
Such high beta, I could have told you that.
A first half
we're going to come down with the market.
Advance, especially as strong as the one we've just experienced, tends to be a running start for the remainder of the year and gives good results for the second half. But maybe that won't be the case this time.
I closed some positions today.
Yeah, and
I closed my SPY puts from yesterday. I closed my MULN shares from yesterday. And I opened up long in the futures. I closed my short futures from yesterday. Well, actually from like a week ago. And opened up some long futures. And got a couple SPY daily calls. Much too early. Keep an eye on MULN too.
Yeah, I'm really interested to see the August revision of March's data. I think that if there is a risk area, it's around the assumption that it's being used for failing and new companies. And perhaps there are fewer companies starting and more companies failing than we know in the data today. And so it'll be really interesting when we see that August data and we see that revision for March, what that tells us. And I think that will give us a big indication of what happens for the rest of the year.
And Sam, we've already seen housing with mortgage rates jumping. That sort of has stalled again. Final thoughts, Sam?
Well, I think that the market right now is at a vulnerable state. We had the S&P growth, the Nasdaq, the three growth sectors all trading well above their 200-day moving averages, as well as above the 70 threshold on RSI. So I think we were vulnerable to some sort of digestion of gains. That typically happens in the third quarter, but I'm still optimistic for higher print by year end.
All right. Oh, interesting. Okay. Rob and Sam, great to see you both. Thank you very much. Rob Nance, One Advisory, Sam Stovall of CFRA. Thank you both for being here. Great to see you. That's going to do it for us here on Trading 360. Thanks for being with me. I'm Nicole Petalides, every single weekday, 11 a.m. and 2 p.m. right here on the TD Ameritrade Network. So I'll see you at 2 o'clock for the watch list. Keep it right here. Fast Market is next.
Let's walk through charts, one of the most commonly used features on thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select Time Frame to adjust the time intervals or to favorite a time frame. Select Style to change the appearance of the chart. You can add drawings by selecting Drawings, Drawing Tools, and then Type of Drawing. For symbol comparisons, select Studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to thinkorswim, head to the Education Center on tdameritrade.com.
When traders tell us how to make thinkorswim even better, we listen. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim Trading from TD Ameritrade.
It's a 13-hour flight. That's not a weekend trip.
15 minutes.
Oh, fine. I gotta take off. Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see you. Ah, they're getting so smart.
Choose the app that fits your investing style.
Nice, Bradley. Hey, Donrell. Doing good, man. How are you? SPY slowly climbing up to VWAP here. Barbecue bounced off VWAP back to 30 cents. MULN's maybe starting to slow down a little bit. We'll see. Still quite a bit of a gap there. I still want to hear the news on Barnes & Noble. What have you been up to, Don? You've been working a lot?
ADP data. Can we trust that? Maybe. We'll find out tomorrow if we can trust it. I thought Lori Logan's comments this morning were really as hawkish as I've seen comments from a Fed member. Basically saying it would have been appropriate to raise at the last minute.
Oh, yeah, we have Harkin today, I think.
She thinks some of the lags that we keep waiting for aren't coming.
Right.
They're not going to be there.
The housing market bottomed out.
And she thinks housing bottoming and coming back up could be inflationary again. So I thought that those comments and the release of them and the exposure to the markets were as much of a move as, remember, it was the foreign markets were down overnight.
Right.
Asia was down pretty significantly, led to Europe, led to our futures, but fueled by the ADP and Lori Logan's comments and some of the ISM data, frankly, was strong. So it was kind of a cascading wave of news that shook the markets. Now, yesterday, when the foreign markets opened down, we shook it off. Today, couldn't do it.
Yeah, and we're back to that old adage. Good news is bad news for equities at this point, so we'll continue to watch that. But watch the yield market. You could watch fast market. You would have
we
got
told
a
you
hint
this
to
10 days ago.
All right. One of the big
I'm in a lot of trades right now.
Today is Meta Platforms.
There, I'm in all those.
Jenny Horn, markets correspondent here on the network, to help us break this down. The rival to Twitter, Jenny. You came and asked me a question if I was going to use the Meta Platforms version of Twitter. No, probably not.
You know, okay, so in all honesty, I haven't downloaded it, or I haven't at least tried to download it yet. I haven't been on Instagram yet today, but I've gotten some great answers from everyone here at the network. So it seems like it's
better than nowhere for sure, man.
Positive feedback, although most people admittedly haven't yet tried it. But
got here just in time.
Fans, it seems like everyone thinks if everyone's on Threads,
got here in time for a rally, Don.
We need to see some more widespread adoption, as well as some further development, as it's obviously just been rolled out. So still has a few kinks to work out here. But CEO Mark Zuckerberg did say that Threads has already surpassed 10 million signups within just 7 hours of the launch. So right now, I think the fact that you have a massive user base, Instagram is the second largest social media app in terms of its monthly active users, with over 2 billion. So it's still twice the size of TikTok, so all relatively speaking. I mean, this is a massive company. I think
if we get a big intraday cup here,
the widespread adoption is relatively
have to break through VWAP first, but
really
wow, look at that tick up on VWAP. That was weird.
There is that definitely going for them. We did see KeyBank today react to the launch of Threads, saying this appears to address several of Twitter's main challenges. The firm did raise their price target on Meta Platforms to $335 a share from $280, also keeping an overweight rating, saying that Threads could represent several billions of dollars in advertising revenue in a more bullish scenario, which assumes meaningful U.S. and international adoption. The product, they also said, will have an immaterial contribution near term, as Meta does focus on adoption over monetization. However, they said that Meta's core ad products are ramping, which raised their earnings estimates for 2023 as well as 2024. Meta has been one of the most impressive stories this year. I think its performance on the daily chart speaks to that. It's up over 144% year to date. It's up 233% off its 52-week low, even having a really nice week. Even though shares are faltering today, down about 0.25%, we're still pacing to gain about 2% on this shortened trading week, which of course is outpacing
nice.
the S&P as well.
So you close them out today?
By almost double. So this name has just been a consistent area.
They attacks indeed.
Even earlier on the session, with the collective weakness we're seeing in the markets, Meta was up about 0.5%. So I think this only further adds the bullish thesis, the bullish case.
Yeah, we were just kind of chilling for a few days there.
Features to, of course, their very popular Instagram.
You know, Jenny, Mark Zuckerberg's ability to identify.
And of course, Monday was a half day,
like he did with
super slow.
Snapchat, right?
Even yesterday was super slow, and then the Friday before was pretty slow.
Universe is a great idea, and it works for him, and he's
nice.
done it before.
No, I think it was the right play.
With Reels, and now he's
good.
copying Twitter and competing. Here's where I fall off the bandwagon, Jenny. We're going to be a kinder, more gentler type of social media. like Facebook? Like, are you kidding me? That is where I fall off the bandwagon, because here's what I see happening. And this still favors Twitter and Elon Musk. There's going to be Truth Social for the conservatives and Republicans. There's going to be Meta's version for liberals and Democrats. And then there's going to be Elon Musk kind of in the middle that says, we want everyone to come in here. And so that competition is probably going to lower the bar for all three of them, because we see what competition does with streaming and other services. But don't insult us by saying it's going to be kinder and gentler, please.
I mean, no kidding. When was social media ever kinder or gentler? And Truth Social is its own whole conversation, because I'm like, when will that actually become popular? We've been talking about this for years now. But I do think it's really interesting timing, because Elon Musk did unveil this new feature on Twitter where if you're unverified, you can only see 600 tweets now per day. If you're verified, you can see 6,000, but 600 if you're scrolling on Twitter all day long. I mean, that is a relatively small number of tweets, I think. So that was not received well. Then he tweeted in his response to his own tweet saying the irony of it was it actually got more views than anything he's ever tweeted. But I think that was met with some serious backlash, because it's like, wait a second, are you limiting now the amount of tweets we can see? It's supposed to help aid bots, but I mean, the bots have never been more prevalent on Twitter as they are right now, in my opinion. So that comes out. That was not received well. Now we have obviously this counter type of Twitter on, of course, Meta's Instagram. I think that's a really interesting timing, just because right now Twitter has not been met with so much love. Now, I will say, you use Twitter for different things than you use Instagram. I mean, I use it for strictly my work and financial news, so I use them completely differently as just my own personal social media use. But I do think this will be interesting to see how this ends up looking on an Instagram.
Yeah, I'm not even break even on those at VWAP.
They have 2 billion.
Premiums are not coming up on these calls.
This is the second, again, largest social media company. That's obviously a win for Meta.
I'm still out of the money though too,
The
which
last thing
doesn't
we need
help.
is another social media platform here, Jenny. That's
I
gonna
agree.
be my takeaway.
There's a little pop on list by.
I don't have Snapchat. I agree.
I thought you were a Snapchat.
Wait, is Jenny Horn too old for TikTok? Hold on, time out. Time out. Headlines being made.
Yes,
I might be.
All right, thanks, Jenny.
She is too old, he says.
News, for us here on the Meta Platform story with their new threads. But now let's bring in Nathan Peterson, Director of Derivatives
AJ from the Bay.
at the Schwab Center for Financial Research. Nathan, I wanted to get your opinion here, because we had a blowout ADP.
He's old enough for Fed chair now.
Summer tomorrow. My question for you is, can the strength of the economy withstand this higher interest rate environment where we can still navigate a soft landing? Because now we've got a quarter basis point hike at the end of this month. It's up to about 94% probability at this point. Can we withstand it? Is the economy healthy enough?
Yeah, good morning, guys. It's a good question, Tom. I mean, I think that's really, so far you could say that the economy has hung in there with the 500 basis points already. So what's another 50 or 75? But I think you also need to question, can stocks hang in there with this recent bullish momentum that they had if rates continue to go higher? If the 10-year closes right here, this would be the highest close since last November. And the 1-year and the 2-year have new cycle highs. And you guys know this, when rates are going higher, it's kind of a 3-hit. Number one, you've got fixed income, which is relatively more attractive than stocks. You've got the cost of capital for smaller cap companies that is going up. And then you also have the higher multiple that goes into those longer term assets from the DCF models. And so I think if rates continue to climb, and when they break out into new territory, so the 10-year at multi-month highs here are new cycle highs on the 1 and 2 year, that's something I think you need to pay attention to and respect if you're looking at or have been looking at getting into this market here, because it has been doing relatively well, really since the start of May. But then Kevin mentioned this too. Guys, we can come in tomorrow, and if non-farm payrolls, comes in below estimates, we can be back below 4% tomorrow.
Sure. Yeah.
So
All right, I'll watch it. You share it in media?
I think we're going to know more tomorrow, and I think right now the market's a little bit concerned that, okay, maybe we have the Fed wrong again.
Yeah, I think
King
that's
of
a concern,
waterfalls.
Kev, when you look at that, the differential between ADP and non-farm payrolls has been growing, but the job market, there's still 1.6 jobs out there for everybody that's looking at this point, even though JOLTS number was below 10 million. It's still
MULN's
robust
kind of
compared to historical
rounding
levels.
out here.
I think what jumped out at me from the ADP report is what's been consistent all along, Tom, and that is
Got a little inverse head and shoulders there on the 5 minute.
232.
Okay, close to 20 cents.
Hospitality. That number, and that's been kind of the sticky thread in these numbers for several months. And when you see that number, you're like, uh-oh, that number's not going away. So that's the first thing I'm going to look at in the jobs number tomorrow, obviously in terms of the headline, but wages is going to be another big part of it. If wages come in, you know, they're looking for 4.2, I think, in year-over-year wage growth. If that comes in hot, you know, we'll see. But I think Nathan's right. If we put too much stock in ADP, the correlations sometimes really break down between ADP and payrolls. I don't know why or how, but they do. And so still the number one data point of the month is tomorrow's payrolls number and unemployment. So I'm going to wait for that before I get really serious about this. But like I said, I think Lori Logan's comments from a member of the Fed caused just as much worry in the markets as the number did, frankly.
Yeah, and she's stated, I'm skeptical about lagged impact of past Fed rate hikes. So, Nathan, that goes into that narrative that we've all been waiting for, that typically it takes 9 to 12 months for lag effects to take hold. But she's saying the economy is so basically so strong that, hey, maybe we're not going to see the lag effects that a lot of people are expecting.
Yeah, I know. It's been one of those question marks. I mean, if you go back to the end of last year and you were looking at what the analysts were expecting for, Q1 of 2023, everybody was bearish because we're thinking, here we go. We're going to get hit with those rates. And it really hasn't, manifested so much in the economy. Now, I will say this. We have seen demand get hit on the good side of the equation. We have seen excess savings on a downward trajectory. I think by the end of this year, they're expected to be back below pre-pandemic levels. But I think the concern with the jobs being that strong is, Kevin's right about wages. We got to make sure that doesn't translate into higher wages. That would be a big concern for the Fed. But with the stock market going near 52-week highs, with employment being so strong, apparently, as evidenced by the ADP report here, with housing prices hanging in there, if not creeping up a little bit in terms of the recent price action, I think that kind of emboldens the Fed to be more aggressive because they feel like they have, this economy that can withstand a more aggressive Fed. So I think that's what is the concern from the bond market.
Yeah. Tom, one last thing. We talk about lags all the time, right? Here's one thing that we don't talk about when we talk about lags. How about $4.8 trillion in spending? There's lags on that going into the economy as well. Right. So if the interest
I picked up some MULN.
By,
small amount. I think we'll probably see a move back to VWAP today. However, I don't know if it's finished selling off.
The government,
so,
when they spend trillions of dollars, they don't do it in a lump sum. It comes out over a long
I guess I could day trade them, but I'll probably just hold it and add some more as it comes down, if it does.
Nathan, you mentioned, I kind of wanted to get back on that, the wages story, because the ISM
there you go. MULN's going up.
The portion in there was elevated another 3.9 points, the employment gauge. I just don't see with this many job openings at this point, and
barcoding,
AI coming into the fray, it's going to make things more efficient. Companies are still hiring. How does that wages effect come down? Because that's
also kind of a little cup here.
More inflationary pressures, and maybe we've seen a bottom in the CPI
handle forming, and then another large or cup.
Right, absolutely.
Intraday.
Look at, what's
VWAP always was going to mess with it, wasn't it?
Airlines, those guys continue to go to 52-week strong demand there. Kevin mentioned
1,100 million gajillion shares
from the ADP report.
Let's see.
Yeah, that is
not as many as barbecue.
There's no premium in this market for the potential for some kind of
free float's 243 million.
Effect to occur here, and that the Fed won't break anything. Right now,
they announced a share buyback this morning, actually.
Okay,
25 million.
One or two more rate hikes,
so
the economy can sustain it, and we're going to avoid a recession. But that's the risk that the longer that you go
Yeah,
with an
that'll be
aggressive
shrinking.
Fed, that just tends to increase that potential of something actually breaking, like you've mentioned before, Tom. And I think that's the concern, that if that services side of the
Anything
equation,
with Meta?
if the consumer continues to remain aggressive in terms of taking
You
out debt and spending,
Am I? What do you mean? Like trading Meta because of Threads? No, I haven't even looked at Meta.
And lower gas prices, then this probably has some kind of meeting point. But the whole question point for the market is when and if that actually shows up with something breaking in the economic data. It just hasn't happened yet.
Yeah, that is the concern.
Is it
because I think the Fed wants to
going
break
crazy?
I don't think they want to, but they think that might be the cure for this asset bubble that we're building up in, as Nathan mentioned, the equity market, home.
MULN 33% now.
Because of demand, flights,
UOP's at 25.97.
To overreact to the regional banks, and the Fed was like, that was their problem. They didn't hedge. How many times do we need to tell you that we're raising rates?
Just little intraday moves here are crazy.
That is a concern. All right, guys, let's take a quick break. But when we come back, we're going to take a look at Home Depot. The home improvement giant is still down modestly this year, despite the
I
rebound
consolidated below
over the
VWAP.
last month. Fast Market's coming right back.
Yeah, I need back to open. Get back to break even, I think. It's crazy. Crazy. Yeah, that's what they were just saying. 30 million users in the first however many hours. I don't know if the stock's gonna pump from that. I feel like it's probably already gotten its pump. And I'm not all that impressed by that. They have over 1 billion people on Facebook. You know, what percentage is of over 1 billion is it? Like a very small percentage went to Threads. I mean, it's a good number, but I don't know. I guess, yeah, I'm not playing it. No, I'm gonna watch it right now though. Thanks, Cameron. Thanks for sharing it, buddy. One super app. All right, we're gonna watch this CNBC piece on. I don't even know. Wait, can I do that? Watch on here.
Potential new meme savior?
Holy loud, hold on.
Christina Partsinevelos joins us now to explain. All right, what's going on?
You like that toss, right? What do bedtime stories, a bankrupt company, and memes all have in common? Fellow Montrealer, chairman of GameStop, Ryan Cohen, or that's at least the speculation on Reddit right now. Bed Bath & Beyond filed for bankruptcy in April, was delisted in May, and now trades on the U.S.'s main over-the-counter exchange. The shares tend to float around until the entire bankruptcy process is over, and its bonds right now are practically free, highlighting the lack of value in Bed Bath & Beyond, especially after Overstock paid about $21.5 million for all of its IP. So that means that they don't even own BedBathAndBeyond.com is not part of Bed Bath & Beyond. It's Overstock now. And yet, Bed Bath & Beyond shares have soared, over 300% since its delisting, which is pretty uncommon for a bankrupt business, and more uncommon, you have retailer investors getting in, and even though they know they would be the last to be paid in any sale. So enter the bedtime stories and meme angle. The Reddit crowd has a theory involving Teddy Holdings, which filed trademark applications to be an online marketplace for everything from towels, picture frames, to children's bedtime stories. It's also registered as a bank in Delaware. The Reddit crowd noted that the address for Teddy Holdings is the same address for Teddy Publishing, which is the publisher of a series of children's books written by Ryan Cohen. There's that Cohen connection. He's a prominent figure in the meme stock world, although he did cash out of Bed Bath & Beyond just last year, making, over $50 million. Investors now, though, the retail crowd, are hoping Teddy may step in to somehow find value in the bankrupt retailer. I called and tried to reach out to Teddy's patent lawyer, but didn't hear back in time for this hit. And so what is this telling us? Rumors, we know, can move names, no doubt. Meme traders are hoping to connect the dots that may or may not be there, suggesting that Teddy Holdings and, in turn, Ryan Cohen can help find value in a bankrupt company that is no longer really Bed Bath & Beyond.
And obviously Bed Bath & Beyond saw these huge moves because of the meme crowd. They haven't given up on this name, even after it's filed for bankruptcy, even after Ryan Cohen cashed out, huh?
Precisely, and the corporate bonds are really not worth anything. So, and the value, so what's the value, right? Because the IP was pretty important, hence the reason why Overstock bought it. But they believe that this company, this shell, whatever's left of it that hasn't been given to Overstock, could be renamed and taken under Teddy's wing. That's it.
I mean,
you're shaking your head no.
Well, it just shows you the lengths
It's
of wishful
possible.
thinking that people are willing to go to delude themselves that anybody who wanted to get into this business needs the husk of Bed Bath & Beyond to do it. I can go back 30 years. There was a bankrupt steelmaker called LTV, and the stock traded around for years and years and years, and people shorted it naked. It was crazy, and it happens every cycle. But the fact that we have the encouragement here of somebody who at one point saw value in a doomed retailer is, I mean, I think we should just be clear that, you know, these are people telling stories to themselves.
Or this is a really confident market right now, right? You have these investors seeking out any type of profit. We're reinvigorating the meme trade again. So what does that say when, you know, when people are trying to find value in names that are pretty much dead?
Or we're trying to find alternatives to the what historically has been private equity coming to the rescue, right?
Exactly, which has not always turned out very well for a lot of these retail names, of course, with all of the debt that they leverage, and then when other crises happen, big problems sort of resurface later on.
Fascinating. It is fascinating.
You guys are all smiling.
This in itself is a bedtime story, right?
Yeah, let me get my glass of milk.
Once upon a time.
But, yeah, Ryan Cohen came to the rescue, cape and all.
He's going to save this damsel in distress. Huh? At least that's the story they're telling themselves.
Christina, thanks.
Fascinating.
As we go to break, what shares of Ford today?
Thanks for sharing that, Cameron. That's good. That's fun. I just learned something from CNBC. I didn't even realize they were different. I always thought Teddy Holdings was already connected with RC. I didn't realize the connection was just because of a shared address, and that was speculation. That's funny. Unless if that's not true, are they misguided there? I know MULN's volume is silly. Yesterday, we were like 1.3 billion. Oh my gosh, today's even more? What the heck? Dude. What? Today has more volume than yesterday. What? More bullish.
Checks if you see savings going down.
Yeah, and if rates stay up here, you're going to stay in your house longer. Eventually, you're going
to. Oh, the dates of Teddy Holdings filing certain trademarks. Yeah, I'm not saying it's crazy far fetched. I lost that. I lost that point. It's somewhere along the road. I lost that the Teddy Holdings was not. Because someone actually in chat was like, "Do you think Teddy owns or RC owns Teddy?" I'm like, "Yeah, I didn't think there was any. I didn't think there was any question there." And I was just thinking of Teddy, the website and the books and the stuff that we know he owns. Yeah. But they were probably talking about Teddy Holdings, which is at this point not correlated with RC at all. And that's where all the trademarks for all the towel trademarks are, basically.
I don't see a lot of catalysts for the stock.
I'm moving up there.
But a couple things go to mind. So they're going to report earnings on August 15th. If you
probably still negative on these calls.
We're going to continue to see this relatively subdued volatility.
Still a little negative.
Basically, as evidenced by the VIX and by the IV on Home Depot here. Maybe you put on a strategy where you can benefit to essentially from time decay.
The future drop though.
So I was looking at the July 21st.
Get those so soon. What was I thinking?
Looking to sell this, going to the 300 strike on the put side. That matches up with the 200 SMA. So if you believe that potentially could be support. And then on the upside here recently, it ran up to 315 before pulling back. If you think that it may stay within this range, 300 to 315 between now and July 21st, The credit was about $1.76. So on the upside, I'm selling that 3.
At least know they're now probably on Peter's show.
Call for protection.
And
guys, you know, we do this to basically maybe put another.
Yeah, there's probably some sort of someone that's watching there that knows someone that's you know, works there, that's a writer or something. I don't presume the writers of the show are lurking around subreddits. So they're looking for it. It's probably word of mouth from a couple connections saying you should check out this story.
And you guys know, because you're collecting credit and because this is a neutral, you want the stock to basically stay sideways. Every extra week that you have on your expiration leads to the potential for some type of a outsized move one way or the other, headline risk, some unknown that comes out of the equation. So look at those expirations and ask yourself, is the
MULN climbing back up to VWAP.
Going to compensate me for the potential risk I'm taking here that the stock does move above 320 or below 295. So on the 28th, for example, you're going to get an FOMC meeting. I can get a 220 credit by going to the 28th or $1.76 by just going to the week before. Maybe I decide to leave the FOMC meeting out of the equation and then target that July 21st expiration.
Yeah, let's break this one down. Skewed a little bit towards the upside using that 200-day moving average as a base. On the downside, July 21st week or monthly cycle, selling the 315 call, buying the 320 call, short $5 wide call vertical, and then on the put side, selling the 300 put, buying the 295 put. You're collecting, it's roughly trading about $1.80, so that's $5 wide on each vertical. That means you're going to have $3.20 in risk per spread on this one, and you see the break evens there, 298.20 on the downside and about 316.80 on the upside, Kev. This is, you know, he skewed it to the upside, so if it does kind of grind higher back to that resistance level that it just came off of, this takes advantage of that.
Yeah, he's got about a 3.5 delta, which means he's moved that put strike a little closer to the money, moved that call strike a little further away from the money. But what Nathan did here...
Thanks, Seaman. Yeah, I mean, I was hesitant only because I'm not sure if this is going to be below the day. I did look like it was going to rally back up to VWAP at that point, just based on this chart. But I think there could be very well be better entries later today, tomorrow, next week, or a more sustained rally. But that could be it, honestly, too. So that's why I picked up a little bit. But I'm not gonna sell this today. I'm not gonna use a day trade on that. There's a really small amount too, so it doesn't matter too much. I guess, let's see, it was actually pretty much just with profits from the gap up.
Good lesson there on using duration is the credit.
But yeah, it was funny. It actually ticked up right after it got filled somehow.
Worth the extra time, which can
Pure
provide
luck.
an event that can move the stock. All right, thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research, for joining us. But when we come back, we're going to bring in Lightfolio for a discussion on Lowe's, the other side, the duopoly.
Trader really suggests 0.5 RRR.
It's been outperforming Home Depot. Fast Market's coming right back.
RRR? What's RRR? I was so early on my futures. I guess it's because I was closing these puts for this big profit. I'm thinking, all right, I don't, you know, I'm gonna bounce from here pretty quickly, but that's maybe part of my bias this morning. Because the melt off like that after already a huge gap down shows a lot of weakness in the market. So inverse cup here, 50% handle would be 440.68, like halfway that gap fill. Or this is the bounce on the handle of this bigger cup right here. Handle. Then we'll probably fully fill that gap. Risk reward ratio. Yeah, I guess I wasn't listening. Is that what they suggest? 0.5? Yeah, I think that was maybe just one specific play they were talking about, because their R&R fluctuates depending on what trade or what spread they're going after. But you say they suggest that a lot, huh? You're doing like, I mean, I'm doing like cash grid puts and stuff. It's even a lot lower than that. But, you know, higher probability. MULN 40%. It's at 24 cents. Almost back to VWAP. Crazy, that was just 10% from here to here. Slowly making them back. Yep, we're definitely early on those. Market was weak this morning. There's a red candle. MULN.
you mentioned maybe Lowe's is overbought according to your data, but maybe Home Depot's oversold according to your data. I'm not sure, but when you look at the happiness levels, it seems like a Home Depot, do they usually come out ahead of Lowe's?
Yeah, well, actually, I will say Lowe's has kind of taken that crown off of Home Depot over the last little bit. There was kind of a big switch there that we've talked about previously. I think Lowe's is doing a very good job with its online presence and with its in-store kind of feel, the vibe. People like the experience at Lowe's a little bit better than Home Depot, which feels a little bit more contractor friendly than consumer friendly. The other caveat I'll put on, an outright bearish call on Lowe's is that, we have talked to some industry experts, and both Lowe's and Home Depot are doing a very good job of squeezing their suppliers and getting more margin out of every product that leaves the store. And so that's always a risk factor that
So Spy's got to make this cut now. See if we get a handle bounce on this.
And that is, yes,
438.20 level maybe.
Interested in going into Lowe's. Yes, maybe they have less money to spend, but if Lowe's is making more money on every item that leaves the store, that can more than make up for it. So we're not throwing complete red flags out there, but there's definitely something wrong with the consumer in the home improvement sector.
Yeah, lumber deflation, unfavorable weather were some of the issues that they cited on their last quarter here. But great data as usual, Andy. Appreciate it. Have a great day.
Thank you. You too.
All right, that's Andy Swan, co-founder at Likefolio. The divergence, Kevin.
This is strong
I saw the
data
charts.
coming out of Likefolio.
It is strong data.
Yeah.
And if you look at Home Depot and Lowe's, we always talk about they're highly correlated, but they don't move exactly in line with each other.
It's interesting. Lowe's actually had lower sales the last quarter, but higher profits because of cutting expenses. Now, we could probably bet that they're going to keep doing that since it's working for them right now. The question is, can they beat data like that and cut enough to make it worthwhile? They already guided lower. So the question is, it looks like the consumer's getting even weaker than they thought.
Yeah, supply chain issues starting to wane a little bit. That's going to help their margins at the same time. Bigger ticket item prices per consumer. But you got an example trade here. Kind of lines up with Likefolio's data.
Hey, listen, when you see data like this, you act on it. So what I did here, I just went out July 28th. Remember, their earnings in Lowe's is August 22nd. So we've got time here. So I went to July 28th. And then July 14th, I did the 215, which is about $7 lower than where we are right now.
August 4th, right? You're buying the August 4th 215 put, right?
Okay, I can change that.
Yeah.
Hold on. August 4th. All right, August 4th, 215, and then I sold the July 14th. You're right, about 2 weeks. Right. Actually, this is 3 weeks, 215. So I did this for about it's showing about $1.90 debit on this trade. So this is just a calendar spread that is taking advantage of the data we're seeing and taking advantage of the move lower in this name if you think that Likefolio's data is accurate.
Yeah. Okay. So we've got the trade here, Kevin. You're buying the August 4th weekly 215 put, selling the July 14th. July 14th. That's going to expand the price, right? It's going to be $1.90. The one that we were initially talking about and we showed on the screen, which I think is a good context, buying the August 4th, selling the July 21st monthly 215 put. That's $1.40 debit.
Okay.
This one's $1.90 debit. There's your risk, $190 per spread on this example. The August 4th weekly cycle on this one, and that's 29 days till expiration. Your July 14th, 8 days only until expiration. You have some assignment risk on that. But you've still got a wide range for this thing to trade in, Kevin, to remain profitable on it.
Yeah, look, and don't forget, if you do get a move down, you've got 13 Vega on this spread. So you could get, have additional profits, not only from the direction, but the increased implied Vega if the implied volatility does go up.
Yeah, and you've got it tight there, but the break evens on this are just below 209 on the downside and just above 222 on the upside, where you can potentially remain profitable on this. So the good wide range where you don't need to be exactly right to profit on a trade like this, but about a month in that position, and a good look at slightly bearish put calendar there based on Likefolio's data. All right, coming up after the break, we're going to take a look at Toll Brothers. The high-end home builder has surged 50% so far this year on the back of robust demand for new homes. Fast Market's coming right back.
Whether you're an experienced investor
Canada no longer advertising? Seems strange. Yeah, I'm pretty sure that's one way they make money. The main way, at least.
Higher return on equity, margin improvement, while at the same time, Toll Brothers has a really sound balance sheet. Now, I will say this, if you actually look at, interesting enough, their deliveries last year, the deliveries were about 10,200 units, and on the high-end delivery expected, as they posted in May, they're expecting 9,500. So they're expecting 700 unit decline in 23 versus 2022, which is down about 6%. But the kicker is prices. The average selling price last year was $925,000. Now it's close to $1 million. So what we're seeing is that about an 8.5% increase in prices on volumes that are down about 6%. So altogether, the math makes sense. Sales are growing, margins are expanding, and I think at the same time, if you look at the company's multiple, it's cheap relative to its historical.
You know, George, what I think is interesting about this company is how they differentiate themselves from the other home builders in that they sell $1 million homes. Their average for this quarter, it's over $1 million, but the average for the full year is going to be between 965 and 985. But here's the thing, George, 20% of their customers pay all cash. The other 70% put at least 30% down. So they have a smoother scale than some of these other smaller where people may be, you know, not being able to afford. People buying
Above VWAP now.
buying luxury homes, so it's kind of a
You can
different
make a
animal for
full
this than
cup
other home
here.
builders, right? They're not as sensitive to
Eye of the
interest
day.
rates if you're paying cash.
Correct. Yeah, at the end of the day, you know, you have to think about Lennar, D.R. Horton. These are two home builders that are basically 3 times the size of Toll Brothers. Toll Brothers is not known for selling total units that are higher than their competitors. They're all about price. And if you think about the numbers I just printed or gave, you're actually seeing the inelasticity of demand for the higher end units that Toll Brothers sells. I mean, margins are expanding because prices are higher that are offsetting some of the decline in volumes that they're expecting to sell. They're basically keeping supplies tight and prices high. And the higher end home purchaser can afford it because at the same time they're putting more down, less financing, and as you mentioned, 20% of the purchasers are paying all cash.
Lords.
You know, you also have to consider
Good, man.
strong trends can
30
continue.
cents.
Just looking at the 10 period over the 20 period moving average on the daily,
Barbecue.
it's still intact.
That's good.
The trend is still there, but at the same time, the valuation fits the narrative as well for the price moving higher because as the price has been rising, so have the earnings estimates. If you look at last quarter, the estimates for the full year are about $8.79 have now risen to about $10.72. So as price is moving higher, estimates are rising, and the multiple at around 7 times earnings has been intact, and that's still cheaper than the historical 5-year average of a 9 times multiple. So valuation still looks compelling alongside some of the margin metrics on a forward basis.
Yeah, and I
Lords,
think
we're
they're
like
doing a lot
3
more
times where we
building
were
when needed
from our
as
lows.
opposed to just building massive, lots, and that'll actually.
You can't
help
just
in
always
real
want it to come
time,
down and be unhappy if it
prices
does.
elevated in this high demand environment despite higher rates. All right, thanks to George Tillis. Great rundown here on Toll Brothers for us. But Kev, when you look at this company, George mentioned a bunch of the metrics that they're seeing improving metrics. Yeah. They're seeing better, prices, and their margins have been decreasing just ever so slightly because supply chain issues are starting to go away a little bit.
They had a
massive 5X
beat a quarter ago, and they reported that the second quarter average selling price about
I like to be conservative with my estimates.
was up 10%.
When it comes to math, it's always estimates for me.
That's inflation.
Yeah, well, but what I'm saying is for this company and a company that trades at a 6 PE, I mean, these companies and the backlog that we've talked about since really the Great Recession of homes, boy. Yeah. They have a bright future. In my opinion, it seems like the economy is set up for these kind of companies to do well.
With demand here and low
prices coming down.
Low inventories and stuff like that, even despite those higher rates. But Kevin, I want to look at a different strategy here. We talk a lot about verticals and calendars. I brought a combo trade here as an example to kind of take advantage if you think this stock's going to move higher while not really getting hurt if the stock continues to fall just a little bit. So we went out to the August monthly cycle on this one. So you're giving yourself about a month and a half in this position. Earnings aren't until about the 22nd of August, so you'll avoid that. This is the August 18th expiration. And buying an 80 strike call. That's out of the money to the upside. That's above their all-time high that it just recently hit. And then to help finance that, sell the 75 strike put. You're collecting a credit of 90 cents. So what does that mean? Well, it means your break even goes down to 74.10 on this before you start getting hurt. Now, there is a cash secured or naked put there on the bottom there, Kev. So you've got about $7,410 in risk if the stock were to somehow to go to zero. So you have to keep that in mind. But this is a kind of strategy where you're comfortable owning the shares if you keep this short put open and it goes below $75. But you get to buy the shares at a discount of $74.10, and you take advantage of all the upside above 80, but then you're still making money between $74.10 and anything above there.
Yeah, this is a bullish play on Toll Brothers. How do I know? Well, it's got a 72 delta on it. But the difference is if nothing happens, you did this combo for a credit, and therefore you don't lose money. Now, you lose money if it goes down lower than 75, let's call it 74 and a quarter, basically, right around there. That's where your risk kicks in. That's where you'd purchase the overall shares. But this is an upside play. If you ever want to know the risk, look at the delta. It'll tell you.
Yeah, this combo trade consists of a bullish call that you're buying and also a neutral to bullish put that you're selling to help finance that call. But definitely an upside bullish type of play, but giving yourself a little bit of duration in this one. But I like looking at different strategies when people say, well, I think this stock's going to keep going higher. It's pulling back a little bit today. What's a strategy that I could use to maybe get in at a lower price if it does continue to fall? Or you just think that it's going to rocket ship higher over the next month and a half into earnings. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up.
Oh, there's a pop on SPY. 1 o'clock. Sometimes we get moves around the hour. Market's closing. I don't know. Algos. News. I don't think we have any data releasing right now, though. Noble up 15.5. AMD popping up there above VWAP. Barbecue 29.90, down 3.5. GME down 3.25. Dude, the MULN volume today is even more crazy than yesterday. What is happening? Bye, climbing now. I bought my calls here, and they're still red.
Year-to-date and 12-month basis. Then we will look at Celsius, as Piper Sandler does say this
Celsius
is one
again.
of the best consumer growth stories. Last but not least, we will look at Sweetgreen, ending things on a green note, no pun intended, with Sweetgreen taking off today, as BofA does see about 30% upside with its new price target.
And just by chance, I had Sweetgreen for dinner yesterday, so that's very, very funny. Celsius has been such a story. This stock has just been so impressive, and it's really becoming a mainstream consumer brand. It's something you encounter far more often. When we first started talking about this company, and places like Folio were saying, hey, this brand is building. We were talking about, hey, it's not even in every store. It's everywhere now. It's all over. We see them in the office. You see, this is really a true alternative for pre-workout for some. It's becoming an alternative to, let's say, a morning coffee for others or tea. It's really been impressive to watch, and analysts starting to give it some love as well. But tons to get through, of course. Not endorsements, not recommendations, upvote, downvote. A little bit of a social media theme. I think it's timely with some of the news that we got yesterday or within the last few days, let's say, from Meta and their rollout of Threads. But we got all names that in some capacity are tied to this space.
Yes, it's definitely a social media theme here, and I've been talking about Meta's Threads all day long, so might as well just keep the conversation going here. Although Meta is down about 0.25%, it was actually higher by about 0.5% earlier today, but was not able to hold on to those gains, despite the fact that Threads so far is seeing some pretty nice adoption levels, with CEO Mark Zuckerberg saying Threads did surpass 10 million signups within 7 hours of the launch. And I think I was saying this on Fast Market, Alex, that this is a company that Instagram is the second largest social media company in terms of its monthly active users. Just over 2 billion it has reached now for several straight quarters. So with 2 billion monthly active users around the globe, I think we're going to see some pretty impressive numbers in terms of this Threads adoption. Will it be the Twitter killer? I'm not so sure. I think they can all live in harmony, but then again, I do remember the era of Vine and MySpace, so trends do come in and they come out very quickly in the social media world. However, we did see KeyBank today raise its price target on Meta platforms to $335 a share from $280 and keeping an overweight rating on the shares. Now, the company, they highlighted the fact
I don't remember Vine and MySpace overlapping.
Several billions of dollars in advertising revenue in their more bullish scenario. They also see this driving some significant product as well as immaterial contribution near term, as Meta will focus on adoption now over monetization. They said that Meta's core ad products are ramping, and they also raised their earnings estimates now for 2023 as well as 2024. Meta, we've discussed so frequently on the show, just given its phenomenal run we've seen this year. Shares are up over 140% year to date, up over 230% off their 52-week low. Street still loves this name. Of the 59 analysts covering it, 49 do have buy ratings. So that is some pretty strong conviction from the street.
No doubt, and maybe for good reason, too. I mean, this stock got absolutely just crushed last year, falling below 90 at its lows. What a recovery. Still a long ways to go to the all-time high, though. So you can get the understanding that some of these analysts still have a ton of optimism for a name that still is not setting an all-time high despite its recent run of optimism and excitement. But there's a couple things that you talked about. I think this applies to all of these names or anything with social media, so we can explore it now and sort of expand as we get into some of these other names. But users are not people necessarily. So we say 2 billion users. I think sometimes we start thinking like, wow, what percentage of the population is that? That is such a huge number. But I don't know if you've clicked on any posts before, particularly if it's like a popular page, some sort of account that maybe posts funny things, or a celebrity. Like 1 million comments are clearly automated, robotic-like spam comments. Like, those are users, but they're not necessarily people. In the same way that there's a ton of, kind of accounts that represent brands, or they represent, kind of maybe even like meme accounts, but those are all not necessarily unique people. They're just unique accounts. So I think we sometimes get caught up in the amount of
MULN's crazy.
Perceived to being on this. It's a giant number, but it's not 2 billion individual people logging on this thing monthly. It's 2 billion users, of which who knows what percentage of those are
2 billion.
robotic accounts. But you made a good point too, I think, about
1.5.
MySpace, first to market, kind of developing this space, but also Vine. Vine kind of walked, I think, so TikTok could run, right?
I think so too. I miss Vine. That was the glory days of social media. I miss Tom. I miss all the social media of 15 years ago. So those were the good old days. I wish we could discuss Twitter as it's no longer, a publicly traded company. But I also think that this is really interesting timing, given the fact that Twitter has reduced now the amount of accounts you can see if you are not verified. Verified users can see 6,000 accounts. Non-verified users like myself can only see 600 a day. This is to help eliminate some of this bot activity. But I will say that Elon Musk's whole mission when he took over Twitter was to eliminate some of these bots.
Make money.
I've never seen more bots on Twitter than I do on a daily basis. So that is a concern, I guess. But of course, it is the battle of the billionaires, Elon Musk versus Mark Zuckerberg. We'll obviously have to see, though, how this plays out once users get more familiar with the Threads software. But our next name today now is Pinterest. Pinterest, a completely different story, but also just fall in this social media world. RBC Capital actually highlighted the fact that they found ads on Pinterest's mobile app that suggests that its Amazon partnership is currently live, which the firm did say is somewhat earlier than expected. RBC did say the integration and economics are unclear today, and
Okay,
added
I'm
that they
probably gonna be
expect
closing
the
these
company
buy calls
will
at
provide
the
more details at its
near the high of the day here. I think we could still get a gap
They
fill,
give a sector perform rating on Pinterest shares,
which I'll just
which
trade
has
with the
also
futures.
had a nice run over the last 12 months. It's up about 40%. Less impressive year to date, up about 13%.
Might get back in
Still
if we get a
up about
handle.
63% off its
Do a second
52-week
trade
low.
today.
But this name doesn't typically trade in the same velocity as, say, like a Meta Platforms. I just think the year-to-date performance of both these names really speaks to that.
I think this is rightly placed in the social media space. We always talk about
That's
this.
crazy.
But it's different than its peers.
Bought
And
it
the reason I
here,
say that is
and
Pinterest
the same
is,
values here.
you go on Pinterest
I
for
could
a
have bought
much
it literally at the
different reason.
high.
You go on it because you're seeking ideas, you're seeking a particular topic, be it running or home improvement or weddings or whatever you might be looking at. Maybe it's food recipes. It's for something, and you're getting ideas, and people pin them to the board, and they create this kind of collage
Okay,
of
I'm out of
different
those
stuff.
contracts.
Bots don't really capitalize on that. Bots aren't necessarily an issue to my knowledge on Pinterest. And if you're an advertiser, it's very clear. If I'm trying to sell whatever the product may be, a new couch, it makes a lot more sense for me to advertise directly on Pinterest, where people might be looking to buy a couch or get an idea for what couch they might want.
Close these futures
or
too.
Insert any other
I'm actually
product.
profitable on those
Or if
because
I'm going on Instagram,
no
if I'm
theta
going
decay.
on Twitter, if I'm going on Snap, or if I'm going on TikTok, I'm not necessarily always going on that for that reason.
I'll
I
look
like to
for
keep
a
up to see what
handle
my friends were up
that
to
can
over
come
the
today.
weekend, or what some new celebrity has some new music coming out, or a new tour is announced, or something like that, where I'm on there for a different reason than sometimes.
Yeah, I think it'd feel like F2 passing cloud.
But if there's also
Or
robots,
poison.
really inflating some of these numbers, an advertiser might be being told that 1,000 people saw their ad.
I think so.
But what if
Today, tomorrow,
X
maybe next
number of
week.
those as bots that are never actually going to buy your product? You don't actually know the effectiveness. On Pinterest, I'm pretty sure we have a pretty good idea.
Yep,
that
picks
it's
this up today.
It's just there's a demographic issue with Pinterest. It's very, it seems narrow focused. It doesn't necessarily get the entire population excited about the product, and so they have a user growth issue. These other companies don't have user growth issues. They have monetizing the user issues, with the exception of Meta, which has sort of found that sweet spot in between. So I've always found Pinterest fascinating, and if they can find a way to open up their user base to get someone like me interested in their product, the sky's potentially the limit.
I completely agree. I think there's a lack of faith in some of these user figures that companies like Meta or Twitter, of course, when it was public, were putting up. Pinterest, on the other hand, though, to speak to that demographic, 8 in 10 Pinterest users are female, and I believe it is like right around my target age. It's between like 20 and 30 years old. So they do need to open that up because that is a relatively small portion of the population. But our next name today now is Microsoft. Microsoft gets included on this list because of LinkedIn, which is like the forgotten social media company, unless you're my dad. I think that's the only social media actually that he has. But Morgan Stanley today did raise their price target on
Jeez,
Microsoft
Jenny.
to $450
That's your father you're speaking
per
about.
share from $335 with an overweight rating, saying that generative AI looks to significantly expand the scope of business processes able to be automated by software, and Microsoft actually stands to be best positioned in software to monetize on that expansion. They said that Microsoft's valuation is still reasonable at current share levels, making it their top pick in large cap software. They did note that several initial trend lines indicate that Microsoft stands best positioned in enterprise software to benefit from this generative AI trend. Microsoft, I will say, was definitely one of the leaders in this space with their sizable investment, of course, into OpenAI's ChatGPT. Since then, we haven't really gotten the same degree of love. Shares are slightly higher this week, down about 3% from their 52-week high, still up over 40% on the year, but just hasn't seen the astronomical strength of, say, like a Meta or Nvidia this year.
Having a nice day today. It's one of the few names you'll see that's actually green, and pretty comfortably green, up almost $4. So Microsoft, parent of LinkedIn, parent of, in some way, maybe say like Xbox Live is like a social media company as well.
Yeah.
So there's a little bit of a social element here. I don't think anybody's mistaking Microsoft, the mega cap giant that it is solely siloed to this. But included on the list because of LinkedIn and some of those other things that it's working on. Super interesting company, parent of GroupMe as well, I believe, and some of the other communication things. So moving on though, Snap. This is the one that I think is most impacted by new entrants because
You got some volume there on barbecue.
On, in many ways,
If you have a bit of a rally.
Being different. If suddenly Instagram can do everything Snap does, you can see why maybe Snap kind of falls to the wayside. TikTok changed things. It provided something new. The same way Facebook provided something new to MySpace and Instagram provided something new to Facebook. And Snap at one point was very different. It was very unique. But as Meta maybe ran out of ideas and just started copying others and relaunching things like Twitter now is Threads, they also turned Instagram into sort of this pseudo Snapchat amongst what it already was, and that hasn't boded well for Snap the last few years.
It hasn't, and I think that when you look at its daily chart, I think that speaks more to the disappointment that Snap investors have felt. But when you look at it on a year-to-date basis, shares are up 32%, but we're trading just below $12 right now, so it's all relative. They were pacing actually to have a 10-day winning streak before today's weakness. Now we're pacing to snap, of course, that 9-day winning streak. It did run up over 20% over the last 9 trading sessions, which was a record-long rally for the shares. So it has seen a nice couple of months. They've also outpaced the S&P 500's gain over the last quarter, jumping about 17% versus the S&P 500's almost 9% gain. So we have seen some degree of outperformance. Again, though, the price tag has been so cut on this stock that I just think it's all relative at this point. Shares are up 61% off their 52-week low. Of the analysts, though, covering this name, 42 analysts, there's 6 buys and 32 holds. 4 underperforms, no sell ratings, but so rarely do you see that strong of a conviction, Alex, to lean just completely neutral into this name.
When I think about Snap, though, I always think about the fact that, hey, there's still some proving left to be done for this company, right? Like the long-term viability of this app as it exists right now, from a monetization standpoint, from a continued user growth standpoint, especially when you have names like TikTok and Meta, with this company, particularly this company in its crosshairs, I would need a premium. I would need this high beta element. The fact that the S&P is up, well, like you said, just under 10%, I would expect Snap to outperform if it's going to be a stock that's doing well, because there's this risk premium associated. I think there's a greater feeling of downside risk in a name like Snap on a day-to-day basis than there is the overall market. So there needs to be added reward potential for that as well. So I think that all makes sense. But as we start narrowing this down and we start thinking about these, I think Meta's clearly the story. And I think that's clearly where it starts and maybe ends in terms of this conversation. One, it's the most kind of successful and biggest and most important name within this space. But it's also making the news with the launch of Threads and some of the stuff that's going out there. So to me, the next question is, well, what pairs best with it, We talked about the differences between Pinterest and the fact that Microsoft is just so actually different. The fact that LinkedIn is such a small part of it, I think it's easy to set Microsoft aside. So it really comes down to Pinterest and Snap. And Snap just seems like it fits this conversation so much better.
To me, Snap and, of course, Meta are the most pure play on the social media world. So sticking with our theme today, we'll move forward with those two being our upvotes today. We'll be looking at some technical levels as well as some example trades. Stick around. Next Gen Investing will be right back.
Yeah, you're getting wrecked. I'm getting wrecked with you on those trades. The beta's too high on Zoom and Teledoc. Market's down, they're just getting dunked on. There's no confirmation yet. You gotta wait for the confirmation. But yeah, now's your time to average in. Still in this wedge. This line's a little high. I don't know why I have that way up there. Trying to catch everything early is risky business. Market should bounce, so I think we're gonna build a hopefully Zoom and Teledoc do as well. I think we'll build an inverse handle here now, or handle this bigger cup being built. I mean, barbecue's at a nice spot, and it's primed to go. MULN made it back to VWAP. Look at that. Almost. It is hard to ignore. I'm still pushing up here a bit. I did get out of my longs. Looking for a break of this trend for a short. Might only make it back down to VWAP, but could go further. For a little intraday cup and handle. Masters.
In terms of support, we've got our yellow 21-day EMA, and it lines up with our lower trend line pretty well right around the 280 mark. 275 is this green dashed line. That's also about where we topped out before we had our most recent leg up. To the upside, if we do break out, the +2 standard deviation channel comes in near 343 right here, this orange line.
Yeah, and Rick, I couldn't agree with you more. It's been sort of phenomenal to see the way that this strength has carried, and I feel like the bears in this name keep waiting for the rally to give up, but when you look at the 12-month performance, it really hasn't. It's been relatively that strong uptrend that we've seen in very few names here, so I do have to applaud Meta for that. Their year of efficiency does seem to be turning out well. I also will say that now I did see that 30 million people have officially signed up for Threads, so that number just continues to rise. 30 million, not too bad for the first, 12 hours of their launch. But now, when trading this name here, Alex, considering the fact that this name, well, Rick said, touched 52-week highs just yesterday, they've seen such strength. And actually, the analyst community's average price target does imply some slight downside from where we're currently trading. So, seems like some do think that we could see this rally pause. Walk us through the name more range-bound example trade today.
Yeah, with the weakness today, we're seeing a little bit of a perking up of the implied volatility across the board. So, looking at a strategy that is both selling implied volatility, but maybe looking for sort of a muted trade in Meta platforms and sort of a move towards and to $300, which is just above here, big round number, but also kind of a relatively innocuous trade here for Meta if it were to stay here over the next month. So, Sun Iron Butterfly straddle the 300 marks, big round number as we said, and then buying $25 wide wings here for this. So it's a more expensive name with a price that is pushing $300 a share, giving it a little bit more breathing room to actually kind of oscillate around that short strike and potentially end up in that range. We went ahead and went with $25 wide wings. If we're able to collect a $20 credit, for example, on this, that would bring break-evens into play at 280 and 320. So a $40 wide window where this thing can be profitable, with, of course, it being most potentially profitable right at 300, which is the short strike. So the nice thing about this type of trade is how customizable it is. There should be $5 wide strikes available in that August expiration. So moving it around as such to better reflect an individual's outlook on this, you could still be neutral, just give it some attitude depending on where you believe is the most likely place for this to be over the next month. But this is as much as an implied volatility play as it is a price action play. Selling a straddle, even with buying the wings, is still something that would benefit just simply from volatility coming out of these options, which would in turn, of course, lower option premium, all else equal. So a little bit more excitement today, taking advantage of that, selling some implied volatility, looking for a pretty quiet trade for the next 40 or so days in Meta.
And now to shift gears here and look at Snap, which is now, I'd say, the closest comparison to Meta, although in terms of market cap, just in completely different companies, obviously. But Snap was pacing for a 9-day winning streak today, breaking that nice rally it's seen over the last 9 trading sessions, Rick. And Snap is one of the more bizarre social media names to me. I've honestly never downloaded it, so I'm probably unfamiliar and the wrong person to discuss its inner workings. But I do know it's basically like a communications app for those that are younger than both of us. So that's always so strange to me, like just text. Well, there's way too many apps out there, but nonetheless, walk us through what you're seeing from a technical front, because this name has been met with some pressure this year.
Yeah, and it's really kind of a mixed picture on the chart as well here. On one hand, we have been just kind of trending sideways here. We did not make new yearly lows during our most recent downward move after earnings, where we saw a big dip here, big gap downward to the tune of about 17%. But after we hit those lows right around here, we're up about 50% from that point. So strong move off the lows. But like I said, kind of not really a clear upward picture here, because we never
I grabbed a short there.
this level of this red dashed line here. That's about
Probably close a view up
here and here. As well as here, right around 1265. So that's an area to beat. It's not too far to the upside here, but we would have to progress beyond the boundaries of our upward channel that we've been in here. Now, it's seeming like that could happen because momentum is still hanging on here. Our RSI, our measure of momentum, is hanging on above that overbought threshold there. We're also moving beyond the value area in terms of our volume profile. These two thick yellow lines denote where 70% of the trading has taken place. So we're moving out of the congestion area around $10, kind of furthering our climb upward here, heading into a low volume area where we could see faster moving prices. So be on the lookout for that. Let's zoom in a little bit though and check out some support and resistance. We can see here that if we do break to the downside, we've got several things kind of within close proximity to each other between about 10 and 11. We've got our 21-day EMA at 11, our lower trend line, our orange 63-day EMA coming in at 1046, and our support level that I had on our chart, which lines up with our volume profile point of control, the area of heaviest trading. To the upside, if we do break beyond the 1265 ceiling that I mentioned, look right here. We've got our purple 252-day exponential moving average coming in right around 14. That could provide a slow in trend or a resistance point as well.
Yeah, this name, I mean, I know it has seen this relative strength. It's been up 9 trading sessions. I don't want to discount that, but of course, we're just nowhere near our peak in this name. So it's hard to, reevaluate Snap given its current levels, because we're just obviously seeing quite a different year than we did, 2-3 years ago in Snap. But we will leave it there. Appreciate all of the insight as always, Rick Ducat, our chart master. So now in trading this name, Alex, completely different story, because I do think there is the thinking that we could be seeing a long goodbye in some of these names. I'm not saying that's obviously the case in Snap, but I do think there's always the risk of some of these social media companies, like we were saying, falling out of favor. tracking towards the high end of their 2023 guidance, ranging between $1.70 to $2 a share in adjusted earnings and about $3.6 to $4.2 billion in its free cash flow. BofA does expect GE management to provide reassuring commentary on their second quarter earnings call, which we can finally sort of discuss earnings now because we're on the brink of this next earnings season. Thank the heavens. GE does report its
Is that enough of a handle?
July 25th, so we do have that
Maybe.
in at least the near term to look forward to here. Of the analysts covering this name, 14 buys, 7 holds, no bearish ratings on this stock. Average
Yeah, I
price
think
started
so.
at around $110
That was our handle right
a share.
there.
This implies some slight upside from
Just
what we're currently
a
trading just
tiny
below
little
$1
23.6%
a
retracement.
share. We are down about 1% today, but gosh, you just look at that daily chart over the last 12 months. Really impressive run we've seen in GE.
And to put in perspective too, I mean, it's
Dang.
5-year highs as well.
I stepped away. I was like
This
hoping
isn't
to
one
get
that
back
I think
before the
is a stalwart of outperformance, but no doubt that it's made a
close those
pretty
shorts. I
impressive,
just stopped out of them.
little run here to start this year, and that's still relatively strong, all things considered, over the last 5 years. When you consider the amount of companies that have struggled last year, that have not gotten anywhere near where they were in the last few years, it's still pretty impressive. Obviously, this is one that front-loaded some outperformance in the decades prior, but nonetheless, pretty impressive run for GE. Obviously, down the pipeline, we got kind of the splitting off of the conglomerate into more targeted particular parts of the company, and the aerospace certainly getting some attention from the B of A analyst in terms of some of the excitement in that space. So this is one, Jenny, that I think clearly, at least today, the fear of missing out is to the upside.
Oh,
And we
MULN.
looked at a trade
I'm
illustration
still
with
climbing
that
back up to
in
VWAP,
mind,
41%,
looking at
24
something that
cents.
would benefit from a modest continuation of this move. Because keep in mind, I mean, I know it's been a huge
Tiny little
percentage
handle
rally,
there.
I know it's moving, but it's not the high beta stock that flies
The
around
smallest
10,
of handles.
$15, $20 at a time.
See if we get a gap fill now. We break this high today.
As well. But we looked at buying a call vertical.
Or at least some of that
Basically, one
gap
strike in the
fill.
money, one strike out of the money.
Maybe the whole
And
thing.
July
Still have time.
expiration to keep things relatively short.
That'd be pretty bullish.
Term here. But
Be
also
fast.
single dollar wide strike availability in July. It was only $5 wide strike availability in August. So sometimes moving around the expiration can afford different strategies because of the strikes that are actually available to be traded. And so I looked at buying the 106, 109 call vertical. This would be, again, one strike in the money, one strike out of the money. For $1.50, that means the break even is $7.50. Well, the stock is basically at that price now. So that's one of our kind of loose guidelines when doing these debit spreads. Really something we talk about is we kind of describe directional speculation as sort of in some ways, a coin flip, right?
Oh, that's because
It can go
VWAP
higher,
is
it
so
can go
high.
lower. And
Forgot
so
about
we
that.
kinda set this up where if I want the stock to go higher for this trade to be successful, well, if my break even is where we're at now, a higher stock price.
Okay, little rejection on the new high.
Profitable. And so that's the one thing, and then equal risk to reward is sort of the other loose guideline, and we have that here as well. 150 in risk, 150 in reward, neither accounting for transaction fees. And again, because if we're thinking of it as sort of it's either going to go up or it's going to go down, well, those are your two outcomes. Let's have equal risk, equal reward to reflect that those two outcomes. But nonetheless, 150 in risk takes place below the strikes there, which is 106. That would be all these options out of the money, potentially expiring worthless. That is the worst case scenario. And above 109, that is our best case scenario. The assumption would be at expiration, these would go through assignment and exercise, offset for $3, net out that $1.50. That's our
Barbecue, little pop up out of the barcode, 30, 20.
But sometimes when you're just
Only down 2.6 now.
directional, that narrow window allows you to be profitable if you're
Thing
right.
has wings, she just wants to fly.
Not profitable if you're wrong.
And of course, this example trade would.
I'm a bird, I just want to fly.
You would be avoiding that earnings premium typically.
I'm a peacock, what is it?
But that'll do it
I'm
for
a peacock, you gotta let me fly.
Coming up next is a name that I am all too familiar with. That is all things Celsius in the energy drink space. As
Jeez, dude, they just
call this one.
pump the cell. I gotta try Celsius now. It's working. It looks delicious. The rugby players, the condensation dripping off the can. $30.40 on barbecue. About to go from red to green. High dancing with that high of the day. I think it wants it. Could do calls. Second trade for the day. Because we still have a lot of upside potential here. What's going on with this? Barbecue 3089 down 0.39%. SPY looks like it's set up a little inverse head and shoulders here on the 5-minute. The head on VWAP at the top of the cup. Potentially this was the handle. Might need to go a little deeper for the handle, I'm not sure, but I think that could count for the handle, to me at least. Got back into the calls. MULN. Well, if it doesn't go up to VWAP, it'll just have VWAP come to it. We're getting close. Go barbecue.
Celsius. I think what their whole
scheme might be, what part of their scheme might be, I should say, is to make people feel like it's more accessible in some ways, right? They're still super beautiful, super fit people on their commercials, but I think it's trying to look at being more accessible and better for you than other drinks when it comes to the health content of it.
You know, Renita, I have a lot of opinions on this because when you still look at the ingredients on a Celsius, I know they have like green tea extract, which is a great marketing scheme. There are, I mean, it's a 10 calorie, I believe, or 0 calorie drinks. There are still artificial ingredients in it.
Right.
I identify much more with the monster crowd, the like dirt bikes, the, you know, all the X Games. That is much more my scene because I think all these drinks, let's be honest, they're not exactly healthy. But to Alex's point, it's definitely deemed as the healthier version. I just don't know what.
Didn't he just say she was an action sports girl?
Calories, because there's always fake stuff when you see that obviously disclaimer. But we will leave it there. Great breakdown on why we are seeing Celsius shares down today despite some optimism from Piper Sandler. Now coming up next, it's time for Under 30. So we are looking at Sweet Green to end the show on a positive note. Sweet Green getting a nice lift today after an analyst does also feel more strongly on this name, seeing shares take off as a result.
Years is the stocks that show improving
to the publicly traded market. It does have some room to run here. This is a story, whereas Chipotle, hard to compare because that is a more developed name, of course. But we will leave it there. Appreciate the breakdown here on this really interesting move today in Sweetgreen. That will also do it for Alex and myself for Next Gen Investing. Now, coming up next, we have the watch list with Nicole Petalides.
There's a SPY pop. Gap getting filled. So market's trading very nicely today. Very clean price action. Not crazy chop. Clean trends. Cup, handle, break. Oh, I went long just too early. Other than that, it's been pretty good. And this little handle, little fast me to profit as much as I'd like, but didn't lose, so that's a win for me. Hey trader. Troop had a pretty big bounce today. Outperform recommendation. MULN back up to 25 cents. Climb into VWAP. Nice and easy. Crazy, just this intraday move. That's like almost 15%. Yeah, it is 15%.
Stock exchange, thanks for being with us. So you're seeing markets under pressure. The Dow's down 363 points now off the earlier lows. Had been down over 500. This
Music.
better than expected ADP jobs report, which means the Fed more likely to raise those rates, and that's
Barbecue wanted to go green there for a bit.
the S&P's at 44.11, down 35. The Dow's
Barnes and Noble double topping up here.
down 363, 1%. The Nasdaq's down 3/4.
Really curious on the catalyst for this.
90, and the Russell down 1.7%. Again, off the earlier lows of the day. Oil and gold both selling off today, with gold down about $10. Oil's at 71.76 the barrel. Oil and gas.
Oh, it's Jenny. Now it's
That's
Nicole.
also on concerns of rate hikes, which could impact demand going forward, despite an inventory drawdown. And the VIX is something we're watching closely right now. 1530 is the level. Bitcoin 30,000.
I'll put a stop on these futures. As much as I'd like to think we're just going to rip through the whole gap fill. Could just be a little false breakout to the upside.
Tell me about what people, how they're
And
interpreting jobs data from today.
little head and shoulders being formed.
Good afternoon, Nicole. You know, this is a market that's been under pressure all day, Nicole. Asian markets were lower overnight, which led to European markets soft overnight, which led to our futures down. And then we got data from ADP, from jobless claims, from JOLTS, all showed a stronger labor market than at least the Fed would like, Nicole, and this market continued to stay under pressure. Now, as you mentioned, it's off its lows for the day and has made a slight comeback, but still, Nicole, we're looking at an E-mini contract down about 0.8%, but the Russell is the weakest performer here, down 1.8%, Nicole. So we look forward after these comments, which, by the way, Nicole, was fueled afterwards by Fed member Lori Logan's comments about inflation and the fact that they should have raised rates in June, and that some of the lagging effects may not be taking effect, and that housing, the recovery in housing, could actually add to more inflation. All this data combined with those comments by Lori Logan. And
It's fine, Lords, just don't ever let it happen again.
Looking forward to the #1 data point of the month, which is non-farm payrolls and unemployment tomorrow morning.
Yeah, I mean, John Williams, too, New York.
That chart on drop.
There's definitely, and what we heard
Escalator pattern.
basically, with a few, at least, Federal Open Market Committee members who had supported a hike in June, but went along with a skip. I won't call it a pause because it certainly seems like we're going to get a rise.
And the owl plays are getting
That being said,
murdered today.
what's going on with Treasury yields? I mean, when I see the 10-year above 4%, I mean, there's
I play the CNBC.
Tell me what you're watching.
Well, Nicole, we've been paying attention to yields for a while now, and
Peace.
because of the regional banking crisis, remember,
It's good. I think that'll be good. Might draw on some new investors.
Happening fueled some strength.
Jumping on the hype speculation train.
Data was coming out strong, but yields were still low. Well, we can't really say that anymore.
These people doing some research into it.
Back over 4%, and 4% brings in competition for yield. People are making choices to exit stocks and move into fixed income, Nicole. So that competition for yield is what's fueling some softness in stocks. Remember, the market doesn't mind higher yields. They don't like spiking yields. And when they see a move like we saw today and the last couple trading days here, Nicole, that makes stocks less certain.
Yeah, and that's the whole thing. I mean, you have the 10-year above 4%.
Yep.
I saw that, in fact, mortgage rates moved back higher again, well above the 7% line. And as you noted, when it happens fast like that, that's where that nervousness comes into the market. And we saw that with the VIX, for example, which we saw moving higher to the tune of about 8% today. So, in fact, definitely a big day. Thank you so much. Kevin Hanks, great to see you. Let's continue our conversation about the market and bring in Antoine Harris, Chief Planning Strategist, Platinum Bridge Wealth Strategies. Thank you for being here. So what eco data are you watching? I mean, for example, that ADP that came in at nearly 500,000 jobs when the estimate was 220. That was more than double. I really surprised everybody on Wall Street today.
I think the economic data that we've been seeing has been much more resilient than anyone had anticipated, frankly. And earlier this year, many pundits were expecting the Fed to cut rates. I have no idea why. I mean, I think data like this really supports the fact that we're going to be in a higher for longer environment. And I think it makes sense to kind of position portfolios for that type of environment for the foreseeable future. You know, we've seen these inflation numbers come down a bit, but some of that decrease was really on the good side, which happened organically because some of those supply chain issues started to resolve themselves. But on the services side, that area has been very robust. You know, the consumer's been very strong. We see these strong jobs numbers, and people are going to continue to work, make money, spend money, and keep this economy propped up and inflation higher for the foreseeable future.
So where's the bullishness coming in?
Well, I think the bull case is really, you know, they had
Oh, they had another segment on it, just like a little shorter, a little highlight.
1.3% to 2%. As I mentioned, the consumer has been very
I think it's good.
The consumer makes up 70% of this economy.
Now, if the speculation is true about Teddy Holdings, then they can go back and say, hey, look, we mentioned it.
In the first half of the year.
So
10 out of 10 times we ended the year up.
that's good.
So that's very strong momentum. That really bodes well for the market here in the near term. But we've had some other signals that have been screaming recession all year long. And I know you've had people on your show talking about the inverted yield curve. When those short-term rates are higher than those long-term rates, it's a very strong predictor of a recession. The leading economic indicators have been down for 14 consecutive months.
Kodak, 5% green today.
Has been preceded by
Look at you, Kodak.
leading economic indicators, and this is the lowest we've ever seen without a recession. So I'm still in the camp of thinking that we need to be cautious here. We've had these multiples expand. We need a very strong second quarter as far as earnings is concerned to support the price to earnings multiple on this market. If that doesn't happen, I would expect this market to contract.
And then the bearish case, you know, and I'm also curious, is there one that you believe in more than the other? The bearish
Oh,
case,
jeez, you added GME.
talk about the Fed looming.
You've got,
well, I think,
what, one day? You said by the 7th it's going to be at 29.5?
The yield curve inversion is not a strong predictor of when a recession takes hold, but it's a very strong predictor that you will enter a recession at some point. Now, the range between when a yield curve inverts and when you actually enter a recession is very wide. So it's anywhere from 6 months to over a couple of years. So the yield curve inverted in July 2022. So we're 12 months in. The median time from inversion to a recession.
You might get a bounce on GME. It's had a big down day. I guess it just depends on your plan. Yeah, I'd be down for that in a little gap fill. 3-4% maybe. But the longer trend to me is not bullish. We've done this head and shoulders at the top of this channel. I'd be waiting to go long until I see some reversal. But shorter term, sure. Definitely see a bounce tomorrow, especially if the market fills this gap.
So say we are at 30% from the bottom, that would put the S&P at about 4,500. So recently we're at 4,400 on the
I don't like GME's options. They screw me. They're illiquid now, thinly traded, wide spreads.
For a potential 2% return, when I can get a risk-free return.
So many strikes, like
what I think makes sense in this
way more strikes than they need now. No one trades a thing.
Money coming in, you want to put it in gradually, so average into the market.
We've got like half strikes and quarter strikes. They need to get rid of all these half strikes and get rid of a lot of these in-between strikes.
In more challenging environments.
Beef up the liquidity on the ones that are still there. Alright, MULN made it back to VWAP. 47%. I like AMC's options a lot better now. I've hardly even traded these, but
when the Fed finally does cut rates, whenever that is, those bonds
look at the open interest, look at the volume. 8 spreads.
Where the Fed is, but in the meantime, you're going to get paid to wait for us to kind of sort this out.
So you have the dividend growers, the international play, these bonds where you're
GME's been fixed.
A good return.
She's a fixed pup.
I wanted to get back to the dividend payers. I mean, that's been a way that people have done this forever, really, right? I mean, my dad used to pick stocks because they paid a good dividend. What about, so I'd like to hear your thought on that. I don't know if you pick specific stocks, but certainly there are the aristocrats that people look at. Avoid large U.S. tech stocks, right? What about emerging markets too? That's another area, emerging market debt.
Yeah, I think there's some opportunities on the international side because those valuations are better than what we've seen here domestically. Also, they've had a broader rally than what we've seen here in the United States. So typically, what's happened so far is that these tech companies, these large tech companies, have
I gotta figure out why my browser lags like this.
I think there's some long-term
It's
momentum that
stupid.
should be in play there. But the other parts of the market started to pick up a little bit in June. They've actually started to
Costing
come
me
back
some money on the entries and exits. Alright, I
we
close out of the
had
futures on
very
long.
participation in this particular rally. So on the international side, the valuations are better. The participation has been much broader, which is more sustainable. On the emerging market side, you have some really
I'll hold these calls. I only have a few of them. Very small. Just ride them.
That interest is repatriated to
We might be just chopping around, or we might still try and make a bigger handle here.
Over time,
These 215.
in a foreign currency could bode well and actually prop up a part of that portfolio. Also, several countries internationally actually started to raise rates before the United States. So they were a little bit ahead of this because they were seeing some inflation from commodity prices that was impacting them a little bit more than what's happening here domestically. So they're a little further ahead in this rate hiking cycle that we're seeing. They may start to cut rates before the U.S., which again, when rates fall, the value of those bonds goes up. So having some exposure to some of those international bonds, specifically emerging
shares,
market debt, may make sense.
Nice.
What I also think makes sense is
I might get into some
exposure to some alternatives. Again, this is a very uncertain
contracts.
environment, and it's very
it bounces on this level,
There's a lot of different cross currents happening
or
simultaneously.
if it doesn't, then one of these horizontal supports. I mean, 15 would be nice. The market really did top the other day. We're trending down the next 6 months. I think we could see lower levels than 15 on GME. I think GME could get to the single digits.
And also help you weather this very uncertain environment that we're dealing with.
Antoine Harris, thank you. Platinum Bridge Wealth Strategies. Thank you. Later this hour, the CEO of lithium-ion battery maker Electrovaya joins us to discuss the landscape.
She looks like she's having a migraine or something.
From the NASDAQ, the company says they could double revenue this year. Let's find out more about that.
Give Nicole a break. Let Jenny come back.
Cage match between Elon Musk and Mark Zuckerberg as Meta launches its new so-called Twitter killer. And our panel looking at Tesla and what investors should be taken away from its blockbuster production numbers. But up next, some reasons to consider adding Topgolf Callaway brands to your portfolio. Stay with us.
Coming down a little bit here. VWAP's pretty high though. I might just chop around a bit. 448, 440, 52 by August. In that case, then yeah, GME probably won't see below 15 before 29.5. Just your price target. Yeah. Could be. I think a lot of it depends on today, really. And tomorrow. But it does look like this is a handle being formed. Just see how much of that gap gets filled. If it starts to reject. $448. Yeah, 448 would just be a breakout on that handle. That's not crazy predictions, I guess. Those aren't as crazy as J Hards. Pretty good volume today on SPY for sure. Yeah, I might get some calls for tomorrow. I'll pull back here. Or 10-ish after that. Hmm? Already City's up 27%. Dish is climbing up. Almost green.
The economy hasn't broken yet, and Powell's tone is still hawkish. So I expect 2 more hikes this year. However, you know, the one thing that I think could be the curveball is inflation is coming down. And maybe we hit 3% by the end of the year. And at that point, will the Fed actually
You're not using ticker feed to see if that's it?
Any hikes is a big question, but
what do you mean? What's ticker feed?
Any kind
I don't think I use ticker feed.
anytime soon from the Fed.
Okay, so that being said, I mean, you still have ways.
Why was the blonde's belly button black and blue? Tree, you've been away for like a week, and this is the first thing you come back to say?
So I'll start
a blonde joke?
I'm a very avid golfer. So I was very excited when the team added.
You need to start with an apology.
A few weeks ago. But when we break
You've
down
abandoned the happy crew.
Topgolf Callaway, their current revenue breakdown is 38% comes from the Topgolf venues, 38% from equipment, which is Callaway and Odyssey, and 24% from apparel. But Topgolf facilities are making up about 50% of their EBITDA. And they currently have 78 locations.
Their boyfriend is
Management
blonde
feels that they
too?
can support
Heck.
250 locations. So their goal is to build 12 new locations.
You
per
picked
year.
up some more mullen.
Now, each location
Mullen.
has a 50% cash-on-cash return. So what that really means is that their break-even is roughly about 2.5 years.
Are you talking
on
about
each
barbecue? What are you
location.
talking about?
Now, the stock did
2076.
see a recent sell-off
Barbecue?
Because guidance reflected a
Picked up another
worry
15K.
about slowdown in
Nice.
corporate event spending. But the CEO also came
What's
out
my low?
a few weeks ago and recently
What do you
talked
mean?
about implementing a dynamic pricing strategy. And
You
it
basically got the bottom
is gonna
today. Well
come
done.
out And they're going to adjust the prices based on foot traffic. So
Happy birthday, Tree.
as the corridors start getting filled with people to golf, they're going to increase the revenue or increase the fees on you, and they expect that the revenue growth from
Bottom
that
right box?
dynamic pricing strategy to be about 2%. Plus, the last 3 tour winners
Weeble?
are rolling putts with their new Odyssey putter, which is also a product line of theirs. And Nicole, in full disclosure, I'm a regular golfer at the Top Golf here in Cleveland. I love the experience. It's high quality and it's a lot of fun.
I mean, this. I don't see that on Weeble. And it's just browser lag.
It's not just golf, it's a whole experience. I mean, if you just want to hit some balls and go get some drinks with friends, you get some
It
beers
spikes my
with the
CPU.
fire pit, it's so much fun.
What job do you start, Tree?
Certainly figure out a way
Congratulations.
to get out of the house and do something that's fun and wholesome, you know?
38, my man.
That being said now, are you worried about, you know,
2866, yet another one.
because there's talk about recession.
Well, I still like it. I think the uptrend is good. Today's, you know, it tested me. I had to draw a new line. But it did bounce off that support area,
I think we're either going to be on the second half of this year
which is
either
good.
sideways or down. Because there's a couple things from our research that are telling us that there's just too many headwinds out there. For example, you know, the senior
What'd you do for your birthday, Tree?
survey, which is basically the
Wish. I like Wish. Kind of sketchy though, man. The revs. I know you don't look at any of this stuff, but revenue's been declining like crazy on this company.
Negative earnings. You know, can this market continue to rally on market expansion rather than earnings growth?
They did just have that reverse split too, which sketches me out.
Our household excess savings is evaporating. We're expected to run, you know, the average household is expected to run out of, you know, emergency money sometime in between September and
But yeah, it is a nice
December of this
kind of
year.
potential
And then
triple
also,
bottom
how
here or something.
Debt levels have jumped the last few quarters, and that was fine.
IV on
when
here.
interest
Ooh,
rates were
I might do
low.
some cash
Now
grid
that
puts
interest
actually.
rates are a lot more elevated, and they're going to stay elevated.
No, that spread's way too wide.
Future margin compression for most companies, and margin compression leads to layoffs, which leads to a lower economic growth.
Tony Zabagala, great to see you. Always. Thank you so much for being on with us. Strategic Wealth Partner.
Thank you.
Tony Zabagala. Thanks.
Yeah, it's all-time lows on Wish.
One-on-one with the CEO of lithium-ion battery maker Electrovaya. What does the company's listing at the NASDAQ mean for the future of this company? What does it mean? We're looking at the strong growth projections.
And there's the reject of VWAP on MULN. Nice, Tree. So you got out of the union? Proud of you, man. Yeah, no, I like the upside on Wish. It hasn't confirmed the move yet. Kind of a dip buy on it. And I don't like the options. Disc golf, sweet love making? Hot tub and tacos? Did you do at least two out of the three of those together? Boned. Trees was doing some boning on his 38th. Dude, what in the world? Yeah, this is kind of breaking that range. What's going on with Barnes & Noble? There's an RSI divergence here on the hourly. I don't know. Easy cut and break it. Yeah, for sure. No, it's a good way. Proper risk management. You can dip buy for sure like that. Shares are also a good call. I like it. Birthdays and Christmas special prenup agreements. Concert food and rental chairs for the lawn? You're having a concert on your lawn? What the heck? This isn't the Barnes & Noble bookstore? Because did they go bankrupt? I didn't even realize Barnes & Noble Education. It's a totally different company. Huh. Oh, nice. Who are you going to see? Stream just dropped? Yeah, I think that was my stream. I didn't even know Matchbox 20 was still touring. Did the video go out? Yeah, MULN failed VWAP. Is the video still good on the stream? Hard for me to tell. Looks like it stopped, but maybe you should have to refresh. I don't know. Back? Okay. Thanks. Yeah, MULN just retested VWAP. I dance around VWAP a bit as well. Durka up 10%.
It's stable at high temperatures, and it makes the batteries much, much safer. In fact, to date, we haven't had any battery using this technology catch fire, and that is deployed in about 20,000 passenger cars and 6,000 plus material handling vehicles. So it's a unique technology. We're also developing next-gen lithium-ion batteries using similar ceramic separators, and those would be directed at more solid-state batteries, which would be very, very high energy density.
Dr. Raj Gupta, thank you so much. Really love that you were with us today. Congratulations on the listing. Electrovaya, ELVA. We'll watch it closely. Thank you for being on the show today.
Thanks so much, Nicole. Pleasure.
Still ahead in the second half of our show, raising the stakes about Elon Musk and Mark Zuckerberg, that feud and the Meta story, the threads, and Twitter may even sue. It's developing. More on that. Winners and losers here in the S&P 500.
Barbecue 3019, down 2.6. Boned. Retesting that breakout level. XXII on 26%. Jeez, on reverse split. They sold shares also? It was planned and it still dumped on it? But did a split and a share sale? Dude, just shorted this thing, that's insane. Gobi's down 13, Overstock's down 12. Wayfarer's down 11. Arrival's down 9. Run climb back up to VWAP at least. At those shares holders, brutal. Yeah, that's a double whammy. Pretty bad. We're 1 billion off exchange. And like 1.5 billion on. No, I don't think we have clear data on what's actually on and off. There's some estimates going on there. 1.7 million volume traded today though. Yeah, it might hit 2 billion. Crazy. I think I need more. This much volume and the level it's holding? Pretty bullish actually. Really kind of setting up a bull flag. Cup. So might get a gap fill for kind of a handle here. I think I do want more on that handle fill. A gap fill down here. Let me know when it hits 1760, 1770 range. GNS all the way back down. Did GNS fill its gap? Nope. I want some GNS on the gap fill too, 66 cents. I think we'll get a nice bounce off of that level. Maybe a little lower. I'd like to see this on MULN. Chart exchange. I know, but the data we get is very limited. A lot of it's self-reported. A lot of it goes through multiple parties. So, I don't know. I don't trust much of it. We could just say that it's high.
Earlier in this instance here in the futures, just about 50
I would believe that.
the highs that we saw end of last
Citadel on GNS? I don't know. I don't think so.
Show you what I've been keeping a close eye on. Look at this. Crude oil futures in the purple line, which has been weak. The indices have been strong relative to, and this is a relationship that oftentimes tracks each other very closely. Here you can see it's been quite divergent as of recent here. So this is going to resolve one way or the other. I guess the question is the selling in the indices the start of something bigger to the downside here? Or are we going to see crude start to show some strength and play catch up? But ultimately, a lot of moving parts here for sure, Nicole. Lots to keep an eye on.
Understood. And at this point, you're also watching these rates that moved and jumped, and the VIX jumped, right?
Yeah, I mentioned the data that we saw this morning. I think that was part of it, but also the run-up we saw in yields also starting to weigh on sentiment and price activity in the indices. Let's take a look first and foremost at the 2-year.
The direct ties?
Shorter dated here, and the run-up we saw. This is back above the highs that we saw earlier this spring through the 5% level. That's going to attract some attention, but not only that 5% level being
I don't know.
also the fact that we've run
I don't remember reading that.
the May low around 3 3/4.
Or I didn't read that, I don't think.
A quarter to the upside. I mean, again, that's going to become a headwind for stocks at some point. Taking a quick look at the 10-year on the right, the 30-year, the longer dated on the left, you can see, well, while that 2 years back to June of 2007 levels, I want to point out that the 10-year right up to those highs that we saw back in March, the 30-year, again, in a similar situation here, still is yet to take them out. And then ultimately got that high up around 4.3 from, we're talking last fall. That's the key level to watch there. But obviously, a lot of focus here on, well, how stocks on the bottom half of the screen have really shrugged off the run-up that we've seen recently of rates. But I think if we were to start to take out those highs from March, get up into that high from October, again, 4.3 in the 10-year yield, that would create a headwind, not so much if, but when for stocks.
High testing the high of the day.
Again, you know, I've been joking around so much for summer markets, right? I mean, these are very busy, wide ranges that we're seeing here. Volatility, saw some big movement today. The VIX was a reflection of the intraday price activity saw in the indices, and this is all a reflection of the investors, traders gearing up for a jobs report tomorrow, Nicole.
Yeah, that's true. More data tomorrow.
We're ready for that jobs report tomorrow. Thank you so much. Good to see you, Ben. Thanks. Now let's dive into one of the most talked about stories, and this is Threads, Meta's so-called Twitter killer. So Threads is now live. It's
Lords, you're happy now.
A lot of interest.
Barbecue's at 3060.
Twitter suing Meta over this. Reuters is reporting that. Joining me to talk more about this, Mark Mills, author of Cloud Revolution, senior fellow at the Manhattan Institute. So this is the real cage match, you said, between Musk and Zuckerberg, right?
Alligator. Dude's got a gator behind him.
We were all hoping for that cage match in the Coliseum, I think. It was a lot
Remember that gator that got your eye?
Social media
Happy?
No, this is a real cage match. And it's
Or your arm? I got his eye.
Contrarian view on this. We don't have enough social platforms.
No, Happy, no.
Media outlets yet. 100 years ago, in the 1920s, in the boom era of newspaper and radio, there were 20,000 newspapers in the United States. Some of them publishing 3 times a day. Many of them. I think the market's hungry for more outlets. So this is great. I think it's great for competition. It'll cause both of them to tune up, I guess. I hope behave better in terms of free speech. So far, the markets look like they're not unhappy about what it means for Twitter. I mean, today, in the last few days, it's been up. That is okay. So this is great. Lawsuits. You remember the famous lawsuits, look and feel, between Microsoft and Apple when Microsoft copied the Apple GUI, how the mouse worked and the screen looked, and that lawsuit lasted a long time. Apple lost. They sort of settled it out. This is how you play in a competitive environment. I think we're still, as you know from my book, in the sort of the end of the beginning of the cloud era. This is not the beginning of the end of the expansion, either of the hardware or the kinds of services are going to be offered. So this is, I'm excited to see the competition, especially between those two.
So the launch was so quick, and as quickly as that, it now has 30 million users plus. And the app garnered 2 million people in the first 2 hours of the launch. How do you size that up?
Well, it's a percentage. I mean, look at the size of the Facebook universe. If you think about it, that's not. I mean, they have a lot of headroom to grow because they have a lot of subscribers to their platform. But I think that's if you're Elon Musk, you'd look at that and you say, wow, that's not nothing. It's a lot like ChatGPT took off with 100 million users. I think it was in 30 days signed up for it. So it's not as exciting as ChatGPT, if you like, but we'll see where it goes in the next 30 days. It's a good indication, to my point, of the hunger for places to talk and exchange ideas in real time. The Twitter idea is a really good idea as a way to exchange news and ideas in real time. I mean, that's clearly the case, which is why they're copying it.
An IPO, CRNT.
They're just some of personal competition.
AT&T.
Between them. I suppose there probably is.
Not out yet.
Sure feels like it. But I think
Kind of late to IPO, isn't it?
a fight for an
Oh
IPO
no,
that
7:14.
the market wants, that people want, and that's I think it is encouraging. I think this
You got
will
like a week till
suggest
this.
that both platforms
Next Friday.
and others will have to think of other differentiators.
Cheetah.
One differentiator I think that you'll see emerge is using AI as a way to validate
Are you getting it
products
pre-IPO?
are real and authentic. That, in effect, AI is the tool you need to sniff out deep fakes made by AI.
Ah, why are you getting this one?
Bet the first one of these two platforms is going to announce sort of an AI sniffer to make sure accounts are real, not just to do what Twitter announced recently, which is limiting the volume of page views to keep bots from downloading page views.
Yeah. I think there certainly is a social responsibility, at least to a certain extent, by these companies. And you said you want more and more social media. There's not enough. And people love getting on there. But at the same time, without squashing folks or squashing free speech, there is a social responsibility. As we know, Elon Musk has been working very hard to try to eliminate fake accounts and bots and things like that, even throttling that this weekend over at Twitter.
That's a cheetah.
Nice. Enough ad dollars
I would jump on the Chinese ones.
Well, I guess I'd
or just randomly pick them.
Limited appetite for people to be advertised to. I mean, we're consuming culture.
Yeah, this CKHL is a Chinese one.
So I suspect there is, broadly speaking, but your point is narrowly speaking, in the short term. Sure, if you're an advertiser, you're going to pick platforms that work, have eyeballs that are new. So
one with warrants is usually good too.
Some
usually sell the warrants for a lot more.
It affects profits on the businesses because you want to steal other people's advertising. But this is not a case of social media stealing advertising from newspapers, right? This is
my criteria. Yeah, look for low float, which these are all low floats.
Competing with newspapers for advertising.
Then I would usually just look it up and see what the consensus was on this.
There's always a limit to how much money people will spend, and that's good.
Yeah, these are all low floats.
Companies, because that'll force competition.
Low float and Chinese. That's what I would go for right there. Chico.
Also be reflected in stock.
Or one with warrants.
To be on. Ultimately, I think people will. I think we've seen that in streaming media for TVs and movies and entertainment. People are willing to pay.
So I'm wondering the AI story and how this fits in. Everybody's on this AI boom as far as buying stocks. And in the meantime, when we look at names like Pinterest and Snap and Meta, there's a lot that's going on. But where does AI fit into this now, too? You mentioned ChatGPT, for example. Where does that fit into the world of social media? Because I'm sure it does.
Well, it does. I mean, Google famously has barred their AI engine onto their search engine, and there's a lot of applications for AI, and it's like asking what the applications are for engines. There's a lot of applications for engines other than cars, right? So AI is an engine; it's a compute function, and in social media, I think what it's going to do is, first of all, as I said, help on security and validating that accounts are real, that posts are real. But it also add features that people didn't have before. And, the steering of our viewing, which we think is a bad thing if the steering is done by, a hidden agent trying to feed us information and disinformation. That's very different than steering to fill my appetites, what I'm interested in, giving suggestions to me. AI is much better at doing that than sort of the old compute ham-handed techniques for just counting page views.
Teddy Holdings,
I think it'll very soon.
Which has no relation to RC.
Invisibly, and how seamless the platform works and much fun it is, and then invisibly in terms of security. I think those are the first two applications.
Just quickly, do you have favorite companies since
it's exciting.
So fully immersed in this, whether it's management
This was a scam? I don't think so.
What are some of your favorite companies that have hit the block in the last 20 years?
Amazon's a beast because it's such a big piece of the cloud platform. Microsoft is hard not to rate it highly as a great company. I'm sort of a barbell analyst in a sense. I love the big guys that are succeeding and doing well, and I like startups, the early stage companies that most people don't pay a lot of attention to, and some of them are, of course, not public yet. I think the startup universe is much bigger than more people realize, and the new companies that will probably go public as markets, continue to perform. If markets go south,
Dude, where's this guy's cabin?
you know what happens. They go
I want to
south.
be his friend.
It's
like an awesome little hunting cabin.
Like companies that make microprocessors.
Just exposed walls,
Along
little attic.
Intel, I'm extremely impressed with NVIDIA. AMD is a great company. The chip stocks are going to get hammered by oversupply. The money thrown at chips by governments.
Here goes Spy.
The market and hurt
Fill that
profits.
gap.
Okay. Thank you so much. Mark Mills, great to chat with you. The Manhattan Institute. Thank you, Mark. Still ahead, we'll bring in our panel to talk all about Tesla and the EV market rally. What to make of its big delivery numbers and potential headwinds it could face going forward. Coming up.
Humans. So much easier to trade SPY when it trades like nice. Just tick off the days where it's choppy and low volume. Be very selective and picky on your days you trade it. I know some people do that. Don't force trades every day. Dish is almost green. Runs up through VWAP now. SPY high on the day, filling this gap. Looks like they're still populating iBorrow desk with shares. B is still 130% on barbecue. Sticking at 100,000.
In here, it's kind of priced for perfection and not much of a margin of safety to protect you.
So in in the meantime, dealer inventory of
There's down 50%.
to record levels, but I will say
There weed news?
EV sales growth fell from the
Oh yeah,
first half
probably some legislation or something.
compared to last year when sales were growing. There's still a big demand for EVs, right? Andrew, when you look at this, you have Ford and GM and, you know, people are getting on board. The EV outlook?
Yep. So it's very positive, very strong. You know, Tesla made those deliveries.
Like they're probably some sort of weed news. EU antitrust regulators opened on Thursday a full-scale investigation into Amazon's 1.7 billion proposed acquisition of robot vacuum cleaner maker iRobot, saying the deal may restrict competition in the market for robot vacuum cleaners.
Have access to Tesla supercharging up 6%, which is the entire market cap of Ford, by the way, which is kind of surprising. So I actually think these agreements with Ford and GM might be negative for Tesla. The charging stations were a moat for Tesla. Tesla owners knew that. They had access to those charging stations. And Tesla makes very little money on it. I mean, I think Musk and some others in the company have said 30% gross margins, 10% net
Fully making GameStop shirts.
But that's really aggressive.
Nice.
If you look at a gas station, for example, and I know
Oh, buyout acquisition from Altria?
but to me, it feels like exchanging that business, like that's going to be the business going forward, is like picking up pennies in front of a steamroller. And it just, at some point, the valuation will matter. It's not
A reaction on MO.
stock goes higher, at least all things equal, notwithstanding the market. It should be biased higher in the near term on those deliveries, but ultimately it's going to come down to valuation.
So from superchargers to gigafactories, all kinds of factories all over the place, stiff competition, but a growing demand going forward, most likely. Doug, is Tesla a buy or the other names a buy?
Well, I completely agree with Andrew on that, you know, the valuation's going to matter at some point, and buying it at 75 times forward earnings is really tough. It's a hot stock. You feel like you're chasing this euphoria. And so we would wait for a better entry point. It's definitely a great company, but tough to buy at these levels. It's sort of priced for perfection. And if there's one modicum of bad news comes out, it'll get hit pretty hard from this level.
Andrew, you have a name that you like, or the group that the names that seem to be the leaders to you?
Yeah, so the news today about the price cutting détente in China is sort of interesting because the Chinese automakers are ascendant. They are delivering improved quality design and tech, and I think it's a lot easier probably to buy the auto suppliers. So that would be Magna and others, Goodyear Tire. So I would focus in on those suppliers.
Right, it's close to its IPO price. It's crazy.
Margins, they're going to have to fill it with these parts, and so I would look to buy that. And Magna has a nice 3% dividend yield. So China is going to be expanding globally, and they're doing it in Europe now.
Why is this thing so cheap?
US as well. It's bad news for GM, Ford, and Tesla.
Losing market share to Walgreens, dying business. What is it? Make $5 billion a quarter in revenue. Losing money on it, but
not just EVs, but pretty much a lot
only a
of
quarter
things,
billion.
Because China is such a key player for success. A final thought here, Doug.
Market cap's only 89 million.
Yeah, just on Tesla, we would definitely focus on Tesla if you want to play this space. They're the clear leader. They have a great first mover advantage, and they're doing everything right operationally.
I wish these options were more liquid.
Valuation to start nibbling at the stock. It's a little pricey here.
Yeah, thank you both so very much. A great conversation. Appreciate it. Andrew Graham, Doug Astrop, thank you both very, very much. That's going to do it for us here on the watch list. I'm Nicole Petalides. Thanks for being with me every single weekday, 11 a.m. and 2 p.m. right here on the TD Ameritrade Network, live from the New York Stock
Maybe just
Exchange.
shares.
Keep it right here. Market on Close is next.
Did they used to offer a dividend? Got an RSI divergence here on the daily. Friday can get kind of volatile. Don't really have any capital. Shares, huh? Looks like the handle may have formed on Upstart. Yeah, right at 50%. Look at that. JH might have something with this Upstart trade. Just a day early. Still an RSI divergence there. Alto is my middle name. This power hour. It's been pretty good, J Souls. Pretty good. Of course, always areas to improve. But no, I'm happy with it. Green is good. RT City up 45%.
It's strong enough to generate inflation in commodity prices like it did coming out of COVID? Are we going to see crude oil ramp up? These are really the key questions we don't have answers to yet, but the bond market is telling us should probably be on our radar now. A little bit of reflation potential. Big day tomorrow with employment numbers, of course, are going to give us some really key context into it. Let's begin our conversation with Kevin Hinks and Renita Young there. So, Kev, the fact that bonds kind of eventually settled in to a range today, the stock market calmed down a little bit too. Is that what happened here?
VIX was 17, and now it's 1530. So it's come significantly off its highs. A lot of these metrics that we're looking for have come either if it's indices off their lows or some of the metrics off their highs. Oliver, I think we all have to look at what we're going to see tomorrow in non-farm payrolls. And here's a little stat for you. The consensus for non-farm payrolls tomorrow is about 213,000. The leisure and hospitality number by itself in the ADP was 232,000. So if you combine that with some of the ISM's services data and the employment part in the numbers we got today, and this number is feeling like it's going to be stronger, Oliver. I don't know if that will be. There's a lot of times there's divergence, but they're looking for 213,000, 3.6 in unemployment, 0.3 in month-over-month hourly wages, and 4.2 year-over-year. That's down a tenth in the year-over-year. The market would probably think that was okay. If it's higher, they're not going to like it.
The potential here for tomorrow to kind of deliver a shock, is that what we should have on our mind? I mean, we've had some labor shocks, but they've been in jolts. Last month was surprisingly strong. A couple big ADP beats. Those are not the top dog of data, as you know. If we get in, I mean, we had a good employment too, but if we get a shocker employment where things are like strengthening instead of just slowing less, how would the market deal with that?
The market, well, rates would go higher, and the markets would resume its uncomfortable attitude towards the market, which you're seeing today.
I like
the question
that, uncomfortable.
Is, it'll just
it's not that bad of a day here.
No, it would make them uncomfortable. No, they did no significant damage to this market. Remember, the average on VIX.
Apple's up.
Yeah, exactly. There's a handful of names that have Meta, Apple. They're all stronger on the day. So this is not a flush out day for this market. It's actually a day that's after the first hour or so, it's traded pretty firm.
Yeah.
You know, VIX was a 17. It's now what is it? 15.
Yeah, 15.2.
Yeah, 15.20.
Yeah.
So
the other thing too is that it's not like some big sell-off in tech. Actually, some of the weakest companies are financials again, regional banks. I think that's a really important part of this market here today, Renita, because as rates are going up, people are going, okay, well, I guess we might be playing with fire again here with some of these banks that came under pressure.
That's part of the story. So today we also saw Wells Fargo downgrading, or less than downgrading, actually cutting the price target, I should say, on 3 different bank stocks we're looking
Chart
at
barbecue?
Bank of America, which is
That's right here.
getting a price target cut, as well as Zions Bank and M&T Bank, sending shares for these off a little bit. We have seen a little back and forth movement with M&T Bank during the day, but Wells Fargo cut Bank of America to $40 from $45 a share. That still represents around a 42% move to the upside from where it's been trading today, keeping an overweight rating on the shares. This analyst says that he lowered its estimates on the company as well and cites the tough operating environment that we're seeing, namely lower interest income and capital markets, also reserve builds for that. Now, Bank of America is down around 15% year to date, down about 27% from its yearly intraday high. We know the most recent news from yesterday was that it announced plans to increase its dividend by 9%. So it's still trying to maintain the confidence and hope and faith in its from its actual shareholders. But the bank, Wells Fargo, also chose to lower its price target on MTNB, and Zions Bank Corp. Basically, the two things that these have in common is a tougher outlook and for net interest income specifically, and then slower buybacks ahead of what they're anticipating to be a tougher regulatory environment for banks.
All right. So still some lingering concern and a little bit of fresh language from the Wells Fargo analyst here, cutting the price targets down. Bank of America getting hit pretty hard. So it seems like it is resonating here, at least to some degree in the market. Thanks, Renita. Thanks, Kevin. Important information about today's session here, as financials are having a tough go of it. Daniel DiMartino Booth joins us, the chief strategist at QI Research and CEO. Danielle, good to have you here on a day where bonds are starting to get interesting again. With banks down, I kind of want to start there because it kind of seems like the market is a little worried that maybe some of these data are going to force the Fed to be too aggressive.
It's looking like it. It looks like the Fed is really going to be paying attention. According to the markets today, to that ADP number, even though all ADP did, if you look at the last 6 months on an average basis, is catch up with where non-farm payrolls were. That's how big the divide between the two was until it was rectified today. But when you're talking about looking at the 2-year yield, it certainly looks like the Fed could over-tighten. They could exacerbate, what we're seeing in a continued credit crunch. Fifth Third just exited the mortgage wholesale business a few days ago. They dropped several regions out west in terms of auto lending. So even though we're not seeing Armageddon, we are seeing banks increasingly squeezed by these high levels of rates, and a Fed that looks like it's not finished come July or maybe even September.
So is there compelling evidence that we might start producing problematic inflation again in this economy? Danielle, does the Fed have to stay on its toes?
I think the Fed wants to stay on its toes, but I don't think that there is compelling evidence given what we're seeing.
Opened up some shorts there, the futures.
New cars, we're seeing
Closed my longs,
continue to go up.
went short.
We're seeing rents come down across the nation, and if I had to guess, I would say next
Be quick to get out of it though. Might see a move back to VWAP or might find support here.
But again, I think that they'll be falling back on everything that they're seeing out of the headline employment numbers, which is why the focus is going to be so important come tomorrow morning.
What do you make of the resilience of employment? There were a few prints here the last couple of weeks that were pretty eye-popping. Maybe they're just hiccups along the road to a general cooling of the economy, but some pretty big hiccups, like JOLTS going back in a very positive way last month and then stable again this month. ADP, I mean, if we get something big in the main jobs report, will it force us to recalibrate expectations for the economy?
I think it very well, it could. The ADP data, though, was very strange. If you look at Baker Hughes rig counts, they've been coming down steadily, and yet ADP showed this big spike in mining employment. I don't know where that data is coming from. The JOLTS data itself, which is 1 month behind the ADP data, showed significant declines in leisure and hospitality job openings, and yet where did you see the spike in the ADP numbers this morning? So there are a lot of cross currents in the data. A lot of it doesn't make sense. To me, I think the statisticians are having a very hard time seasonally adjusting the data in a post-pandemic world. And I think that's a lot of what we're seeing. We cut it down to the chase. We look at the number of Americans who are collecting unemployment benefits, not initial claims. They've already qualified for and been approved for continuing claims. What we saw this morning out of the data is that we've now got 46 states in the United States, 46 out of 51, including Washington, D.C., with rising continuing jobless claims. That's the real economy for you. But again, I think Jay Powell wants reasons and excuses to continue hiking rates, so he's going to pick and choose the data as he sees fit to continue tightening.
What makes you think that last part? Because that's where it gets a little bit of kind of a person read, a poker face read. When you say that Powell wants to have a reason to hike, I would argue that in the last meeting, technically he had all the reasons he said he pays attention to, and he still didn't hike, so maybe he's not that determined.
I think the June pause had more to do with the potential fallout on the credit cycle side. And even though we've seen the bankruptcy cycle continue to pick up steam, we haven't had a high yield ETF shut down in the middle of the day, anything cataclysmic. We haven't seen anything of a systemic risk nature, but those minutes were very, very pointed a few days ago, saying that if there was going to be a descent last month,
There you go, barbecue. Let's get red to green today.
It was going to be people dissenting because they were
The 37.8's down 1%. Little volume coming in there. Highs coming down.
Again, I think he wants to continue shrinking the Fed's balance sheet. Nobody wants to talk about quantitative tightening because Jay Powell doesn't want to talk about quantitative tightening. So he just moves people on, but that doesn't take away from the tightening effect of shrinking the balance sheet. We'll see more of that right after the close when we see a good $50 billion of treasuries roll off.
426.9, nice. Well done. Yeah, today's cap down was present to all the bears that were already in.
Expecting to see Fed funds futures and other indications start to price in a higher terminal rate than what the dots suggested in the last meeting?
A higher terminal rate, not necessarily, because it seemed like the majority really did foresee 2 more rate hikes, presumably between now and September. So, but I do think you could see, if we get past blackout, which starts next Friday, so if there's nothing crazy deflationary in the CPI print, or if we don't see a big, huge increase in the unemployment rate, I think that markets could quickly move from having priced in July as a foregone conclusion to beginning to price in September. The market's not there yet.
There's all this talk about the lagged effects, as you know, Danielle, with regards to the economic fallout from the hiking regime. I mean, last year we got a stock market that crashed. We saw some banks that went bust, a bunch of IPOs and SPACs that disappeared.
Okay, I'm out of that. I'm out of those shorts. Little gainer there.
Banks was so swift and accommodative again. I still wonder if maybe over the coming months we should be on the
I think it has a little further to go.
whatever the opposite of lagged effects is, like the lag
Barbecue 30.89.
banks, which includes the pause.
High of the day here.
Part of the framework here.
Actually, I guess we opened a little higher.
I think that what investors should be paying very close attention to is what the banks are going to be saying about their
Red to
net
green. Let's
operating
do it.
margins coming into, and we'll know quickly, right?
Yeah,
Financials report right out of the gate. I think that that's where people should be focusing, where they're seeing markets going, especially once we get down to some of these regionals that are presumably being squeezed to kingdom come.
I asked Running with Bears what he thought about Rite Aid.
Small banking crisis has gone away necessarily. I just think that it's on the back burner. People aren't paying
Seems
attention to it.
tremendously
Look
undervalued.
for those earnings, because I think that they'll be screaming the Fed has gone too far.
Okay, so tell me again what to look for here, because that's coming up around the corner here, and I think it's a crucial point. What standards, what benchmarks should we be using here when we look to those earnings and go, all right, this is still a problem, or maybe we've moved past it? You mentioned margins. What else?
I think you should be looking at loan growth. And I mentioned Fifth Third exiting certain lines of business. I mean, that's not what banks are in business to do.
Okay.
Banks are in business to make loans. If they're making fewer loans, that's not a good sign.
Okay, all right, great. Nice setup here for us into the earnings season. Danielle, thanks. Good to have you here today.
Thank you for having me.
Absolutely. Danielle DiMartino, Booth CEO and Chief Strategist for QI Research, still unconvinced about the economy's resilience. Too much focus on the employment situation for the Fed, perhaps. We will get the fresh update on that tomorrow. Danielle with a great point here that financial earnings are not far away. A much needed look at those numbers will be in store because regionals are getting hit today. When we come back, let's talk about that Meta story In case you missed the latest, Mr. Musk looks like he will be suing. Can't say I'm surprised.
Barbecue went to green. Red to green, there it is. Volume spike 3140 plus 1.26%. High of the day. We're on our way. Baby steps to mega yacht. Oh. Push it real good. Maybe 14 steps.
Is going to get a little lawsuit, it seems like. Mr. Ed Butowski back with us, managing partner at Chapwood Investments. Ed, good to see you. Last time we talked some macro, and today we're going to talk a little micro here with Meta's attempt to capitalize on a little Twitter exodus.
Baby steps like this rocket.
Well, I'll tell you, I actually know Alex Spiro, who's the attorney.
Baby steps don't get burned.
Twitter, and he's a really, really tough guy, and he would not be writing a letter and bringing a suit unless he really felt as though Twitter had been done wrong. So this is going to get really, really interesting. Alex is a really smart young man, and he's a really good attorney. So, you know, and what the claim is that Twitter or a bunch of the people from Twitter went over to Facebook or Meta and took some of the trade secrets with them. And that's an interesting thing because there is a lot of similarities between the two. I actually signed up for Threads today, and you could see that they're very, very similar between Twitter and Threads. So, you know, there's got to be something to it. Otherwise, he wouldn't have brought that suit.
Yeah. Right now, I guess the market is kind of just focused on the quick volume growth of users that showed up on Threads overnight, basically.
Yeah, no question about it. And I think that, you know, when this is all said and done, I think Threads, Instagram, you know, Meta is going to win. I mean, they're 12 times the size. So this means they're just having to pick from their already existing client base because they have 3 billion users, and Twitter has 250 million users. So that's a 12 times, you know, difference. So, you know, when it's all said and done, I really believe this is
Dude, what's up with Upstart's valuation? Seems awfully expensive.
going to suffer from this.
You know, it was like 2 or 3 years ago. I guess, no, it was pretty.
Oh, AI.
It was like 4 years ago. Everybody wanted to boycott all of Zuckerberg.
I see the cup and handle
Now
here.
it seems like they want to boycott Elon, and now they're okay with Zuckerberg. You know, like it's
But I
interesting to
don't
hear,
know.
like some people just
Scared.
like, need an enemy. You know, like do you think this really is gonna? I mean, is that powerful enough sentiment to like change the direction?
Barbecue back to red.
I think it's a lot of the ease. I think, being on Instagram and then being able to use threads and having them be interchangeable is going to be a real win for Meta. I don't think that, there's this incredible dislike for Zuckerberg, nor, is there this incredible dislike for Elon Musk. Although Elon Musk, when you have people on the left, they tend to get really, anxious about people who lean to the right. So that's why you probably have seen a lot of people leave Twitter. And Zuckerberg, seems to be in the catbird seat right now.
All right. And as far as it goes with this story being able to overpower or become the driving force for Meta stock, which has been kind of a combination of the big tech growth melt up, kind of macro related, Fed pause, all that stuff, but then also extreme cost cuts and kind of rebranding of the mission. What really drives the stock from here? I mean, even if Threads gets a bunch of users, but then Fed's got to start hiking again, how do those things offset? I mean, do you think this is like a powerful enough secular trade?
Yeah, I do. I don't think the Fed hiking is going to disrupt Meta's growth story right now. And I think if the Fed hikes, it's going to be a very, very minimal hike. I do believe that it's more of a sideways movement for interest rates, and then we're going to start seeing them trade to 2024 numbers. So I actually believe we're going to see Fed funds rates lower at the end of the year than we see them right now. So I'm very positive about Meta stock, although it is a little overpriced right now. It's about 2 to 3% higher than what the industry forecast, the aggregate consensus is. But you never know, just how much it costs to run a business like Threads. But if you start doing the numbers, it doesn't take that much to run a computer business, although Meta has laid off quite a number of people. But to run something like Meta, or excuse me, Threads, probably doesn't require as much manpower as you might initially think.
Fair.
So they have quite a bit of leverage when it comes to bringing in advertising dollars through Threads, which is a whole new source of income for them, and they're hoping to steal a lot of that away from Twitter, which they probably will.
So you make some hires to build out the app, but then to your point, there's going to be a lot of synergies in the overlap between all of their other products as well. So maybe they can wring out a little extra profitability without a huge amount of expenses. And speaking of your view on the Fed's limitations, given a soft economy, you talked to us last time about stocks being overvalued, about how you wanted to own, dividend payers, utilities over chips. So that's aging pretty well here over the last couple of weeks as stocks pulled back. But the data part seems like it's improving a bit. I wanted to get your quick thought on that, Ed. Going into tomorrow's employment, have you been impressed? Have you been surprised by any of the resilience of the data?
I'll tell you, I'm more surprised at how erratic the information is. And, because one day you're sitting there and thinking the whole economy is very weak, job numbers are going to be poor, numbers come out better. Then you're looking at high numbers and they come in poor. I don't know how they do these surveys because they're so, inconsistent. So I really, halt to make any suggestions on what I think the numbers are going to look like, because I could be 50% right or 50% wrong.
True.
I just don't know. But I do believe that the economy is a little bit more resilient than what people had thought it was going to be, and I'm happy to see that. I think we're in for a good time for the rest of this year.
All right, thanks, Ed. Appreciate the catch up and the specifics here on Meta Fund Convo. Ed Butowski, managing partner at Champwood Investments. Tom's got 3 trades coming back. I know there's at least some bullishness mixed in here, perhaps some call buying on the beaten down stocks today, and Meta in the mix there. I know that one's bullish. I want to see if the Delta one is bullish too. Tom will be in here in a moment.
Almost back to green. Almost. Oh, back to green. Baby steps to $500 a share. Aw.
Here, Tom is in studio with 3 bullish trades. You are in the lion's den here, Tom. Stocks
Yes.
down with a bunch of call option buyers. Meta, what are they doing? What did you see here?
Well, I think everybody's trying to buy the dip, you know, looking for an unusual option activity on a down day like this. It's typically not that difficult to
in the
find.
middle of an uptrend for stocks.
Yes,
you're going to see a bunch of call buyers.
But this typically happens when people are still in risk-on mode at this point. The first substantial pullback that we've had in weeks, but you know, Meta's still up 144% this year. It's pulled back a little bit today on the release of their threads. Yesterday, after about a few hours, they had 10 million signups. It's over 30 million right now, so gaining some traction there. You did mention with the previous guest that Twitter going after Meta here.
AMC's up 1.5.
I mean, why would that be a surprise? As soon as we saw, like, literally last night when I opened up, I thought to myself, how is this legal?
Yeah.
I mean, they did the same thing with Snap, basically. I mean, like, look, I'm not the lawyer, okay? I don't know. I could be totally wrong, but as like the simpleton, don't think it's outlandish to say, like, the first look at it looks exactly the same.
Yeah,
but then, of course, Parler looked also exactly like Twitter, too. Like, every Twitter impersonator has looked like it. So I guess maybe this time they felt the need to actually threaten legal action.
Greatest form of flattery, right?
Dish is now green.
But, I mean, at some point, you're just kind of cheating, too.
Yeah, but that's, you know, if they hired a bunch of Twitter ex-employees, remember, Elon Musk got rid of a bunch of the engineers.
Well, he might open himself up to risk there if they give him proper non-competes.
Yeah.
Normally, in a business like that, you'd have sometimes years-long non-competes.
Right.
But if he was too rash to get rid of them and not secure himself that way, then that could be a major problem.
Yeah, oh, definitely down the road, and I'm sure there'll be more squawking about this as Threads continues to add users. I mean, I think that's going to be a big thing. And what type of impact will this have on the ad tech business, the ad side of this business, right? You get 30 million signups in 12 hours. You know, advertisers are going to take a look at this, right? And they've already got 2 billion monthly active users on Meta's platforms across the globe. So
2 billion on it now?
Be another way to monetize.
Thought it was 1.
Business.
Over 1.
They'll have to wait and see on it. A lot of signups.
That's
a lot
crazy.
Of momentum in this name. Got some more price target hikes today. KeyBank jacked them up to 335 from 280. A lot of people have this on their focus list as far as the analyst community goes. But even on a pullback, you're going to see some bullish sentiment in here. We did in this one, really short-term positioning though, Oliver, just into the end of the week. The 300 strike call, right? It just fell below that level, which would be, you know, a new 52-week high, about a year and a half highs. But there, over 80,000 of these things were scooped up today, the 300 strike calls in the July 7th weekly series. Average debit of just over $1. So that break even just over 301 over the next 24 hours. That's about 2% above the current share price. So you don't need a massive move. We get a rebound rally on maybe some jobs data that sends us higher. We could easily get above that, but this is really short-term positioning. Call volume, which is normally really big anyway. It's 3 times normal daily average volume that we've seen over the last 5 trading sessions. So over 500,000 calls traded in today's session. You can see this is just a straight call buyer. Somebody expecting, Meta to hit new 2023 highs here into the close tomorrow at expiration.
All right, looking for new highs. Call buyers, unfazed by the
Unfettered
legal.
MULN coming down a little bit.
Let's talk Delta and Micron. 2 bullish
Probably want to
trades
retest.
here. Delta's down about 2%.
Continue to fill that
Obviously,
gap.
a total face ripper. Not surprised to see dip buying here. Maybe a little bit more scary in Micron. Let's go Delta first.
Yeah, Delta TSA numbers over the past weekend.
Huge.
Huge. Back to 2019 levels. Actually, a couple of the days
Huge.
Above 2019 levels. And think about this, Oliver, and I think this is what gets lost in it, right? People are paying up for tickets. You're paying double, triple what you did 4 years ago. But at the same time, capacity still has not expanded to 2019 levels. So that tells you right there that these planes are full and people are willing to outlay even more capital for these I'll call them overpriced tickets, but they are compared to what I'm used to paying on a historical basis.
Depends where you're going, man. You end up on a beach with a pina colada in your hand. It's priceless.
Yeah, that is true. It's worth it. It's worth it.
All right, but still, it's pretty expensive.
But they did give it a
You smoking again?
update on the 27th. Now they've got earnings coming up next week, so you have to take
Listen
that
for the
into
vape.
consideration. And I think that's what this trade is setting up for an earnings type play. They did raise their fiscal year 23. Not only estimates on revenue, but free cash flow. They jacked that up $1 billion. Oil prices have been weaker than what we've seen over the last. That's been in a downtrend since last year.
Watching Super Song Green to realize there's more to Bobby. It's funny.
International travel is really
They're starting to get bullish on it.
Make a lot of their margin. So this will be an interesting report after that mid-quarter update they gave at the end of June. But we had some call buyers in there out in the July 21st monthly series. So just a couple weeks till expiration. Trader bought over 10,000 of the 48 strike calls. Average debit of about $1.16. So that break even of 49.16 over the next 15 days is only about 3% above the current share price in there. We've seen some good reports out of most of the airlines recently. I think the key for this is how upbeat is the CEO, because he's usually pretty upbeat on the conference call, and what kind of guidance. Has their guidance levels changed, improved from that update they gave us just 2 weeks ago?
All right. Always forget that airlines are real early in the earnings calendar as well, so coming up very soon.
Delta and Pepsi are right before the banks on Friday.
Micron, what you got here? Give me the trade.
Yep, September calls. So somebody trying to buy the dip in there, fallen to over 22% in the last 5 weeks. So somebody in there trying to buy the dip. September 62.5 strike calls. Over 3,500 of those were scooped up for about $3.25 debit. So that break even is 65.75 over the next 71 days, about 8% above the current share price. So giving themselves some duration for this one to rebound, as they did give an update at the end of June on the 28th also. Demand growth reduced in DRAM and AMD. That's right in their wheelhouse. Then they've also got the China issues with the CAC, or the Cyberspace Administration of China, who's kind of pushing back against Micron. That's 11% of the revenue. So keep an eye on this one, but somebody buying some longer dated calls.
It's one of the dicier looking chip charts right now, I think, Micron. So confidence showing up with the call buyers. Thanks, Tom.
Yep.
Bullish, bullish, bullish. Micron, Delta, Meta, all bullish trades. When we come back, we are going to do some trading in the commodity world. We're going to talk commodities. We're going to take a look at crude oil, copper, see how that fits into the macro narrative today, which will be the subject of our discussion with the Schwab panel into the
In the dark comment section.
Giving us an update on Ford, so we have a lot to get through in the half hour until.
I thought it was a bullish little segment. Highs coming down to VWAP here. I think I'm gonna get some Rite-Aid exposure. Multiple different ways. Alright, 20 minutes to close. Barbecue's trying to flip from red to green. NBC that said that it was a hit piece? Oh, I didn't even catch that part. Did they say there's naked shorting? Ugh. Well, whether there's naked shorting or not doesn't mean that people haven't deluded themselves into believing some conspiracy or connecting dots that shouldn't be connected. But actually hearing it from their side, it seems pretty plausible. The one fact about Teddy Holdings and RC owning it. I mean, that's why I say I think it was bullish. This is what I was talking about with MULN with my entry. Figured to do something like this, so to day trade it more or less, but I wasn't planning on it, so got a small position. Might get him more and a gap fill.
Were short in this period. Their electric vehicle sales, though, are still small for now. EVs represented just 2.8% of their total sales during the second quarter, while traditional internal combustion engines represented roughly 91% of their overall sales, and then hybrids represented about 6.5% of their overall sales. So we focus so much on the EV conversation when it comes to a lot of these legacy players, but I think it's important to keep in mind it's roughly 3% of their total revenue, so it's not necessarily moving the needle, although it is burning significant cash. Ford has guided for about $3 billion EV business, which again, I would say it's all relative because Tesla,
I might lose power here.
Before it reached like 500,000 vehicles, I believe was the mark when we started seeing more regular profits from the EV makers. So Ford is still a long ways away. So I find them not really comparable on a year-to-date basis for that very reason. I mean, Ford is up 29% year-to-date, even with this move lower today. It's down about 10% now from its highs, but up 37% from its low. And again, it was on a really nice pace. Now, we did see some analysts react to this news less favorably today. We saw their price target cut to $10 a share from 11.
Yeah, that's normal. Citadel's all over the trading floor.
Shares to hold from buy.
They're like the #1 market maker, and one of the with the most successful hedge fund of 2022 or whatever. Did you hear that?
They had several recalls, they had several missteps, but I think really over the
A little extra power, that's true. Maybe I'll speed the market up with my boosted power.
I think that there's signs that point to some optimism, at least from a chart perspective.
Yeah, I like that. A couple of really good points there, and namely is that it's a totally different business when you look at the EV burning cash but with growth potential versus kind of the cash flow reliable nature of the
I love weather.
fleet. But how the market reacts to it, it's hard to kind of know. It's strong year to date, so it kind of catches some of that bullish growth trade, but then
I don't know.
At the same time, the analysts are not
I don't know,
happy
Cameron.
with numbers here. I'm kind of surprised to see some of the outright cuts following these figures. You know, still pretty good.
Moving furniture.
So really
Nope.
interesting company. Thanks for appreciate it. Ford has a lot of nuances to it these
Maybe
days.
because of
Down, though,
Mark Cuban's tweet.
steep rally in the last couple
Kind of an
of
interesting
weeks.
tweet.
For the deep dive.
Wonder if he's long on barbecue.
Commodities, and let's take a look
Japan's
at
up 8 now.
as we head into the closing bell. Bob Iacchino,
And
Chief Strategist,
Jhart says
partners. Let's talk some commodities.
MULN's now on Reg Show.
Looks like there is this trade going on related to better than expected economic data, maybe warmer than expected inflation, but I guess that's the part we're not so certain about yet.
Really?
I think you're right. We are not certain about it, but it really does seem like the Federal Reserve feels differently. I don't know if you'd say they feel certain. This particular set of data today was troubling because the PMI numbers, more so the manufacturing, but the PMI numbers in general, have pretty good predictive ability and predictive ability for recession versus no recession. And people have been
Barbecue wants it, man.
hypothesizing
We might have a Green Friday.
manufacturing PMI would pull down services.
Right.
So the services PMI combined with the price index of the services PMI being the weakest since March of 2020, that's a strong economy. That's a stronger economy. It's an expansionary territory to move back into expansionary territory from contraction. I really think that's the big number. ADP, fine.
Sure.
You could look at it as a one-off, and it could be followed by another one-off tomorrow morning with the non-farm payrolls number. But the services and to a certain degree the composite, I'm still going to look more at that services PMI. We're a services economy, so if services goes into expansion, it has the potential to pull the manufacturing PMI up, which breaks a lot of recession narratives. But what it also breaks is the idea that somehow inflation is going to come back into that sort of 2% range that the Fed is looking at. And because of that, we saw a little bit of a steeper yield curve today. Not much. I mean, the 2s10s went from negative 103, I believe it settled yesterday, to about negative 90.
MULN getting towards that low of the day.
It's interesting because usually when you come out of an inversion, you come out of it with a bear steepener. And for people who don't understand what that means, you take a, I don't know, you take a 4% 2-year and a 3.8% 10-year, and then you end up with a 3% or a 2% 2-year and a 2.5%.
Thinking of a buy right on Brad. I just options aren't great. You can get a nice fill on it, it'd be good. Looking at these August 2-strike calls, I like a 9-cent fill.
Is troubling from the Fed's perspective.
Okay. Bob, I want to try and describe your macro view as one of our regular guests, and
but I also, in the same sense, I'm gonna go long on these options.
I use myself too because I think.
But maybe the $1 would be better.
Described as the catch-22 situation for stocks, where there is this underlying.
But I'm gonna wait till tomorrow, I think.
That presents a little, some of this recession risk that you've talked to us a good deal about, but. More relevant for stocks possibly is that when the data don't cool as fast as expected, we've got the flip side inflation risk. Because a lot of people, I think, have trouble with that, where they go, oh, well, you can't complain about the data being too soft last week and now complain about it being too hot. I would argue, I think, and you would too, we can, right?
Yeah, I would absolutely argue that. And I like the catch-22 reference there because you're basically in a world with inflation too
Barbecue
hot.
gonna end green?
If the economy doesn't cool, inflation stays hot.
MULN maybe double bottoming here.
Bianco explains it the best, where we had a 1.4, 1.2.
Me almost down 4%.
That's going to be very
Group
easy to jump
up
over that
8.5.
bar as we get to that point.
That is neat.
Next set of inflation figures where we'll get that, and it'll be very easy to have a lower inflation print month over month versus last year's. But
Dish up 1 1/4.
start getting back to 0.2 month-over-month inflation compared to the new numbers. And
He said it. He said recession.
To that inflationary strength that we haven't seen for a while. To your point, Oliver, people seem to be satisfied with inflation growing at a slower rate and strength in the economy. They're calling that Goldilocks. They're calling that the soft landing. But the key is that the Fed is not comfortable with that. And offline, I'll tell you my new conspiracy theory about that. I just realized.
Yeah, let's run it through the filter first in the DMs.
Yeah, I mean, it has to do with the new multivariant core that the Fed's been working on. It's a whole thing.
Okay.
So, but when you look at it from that perspective, you're talking about an economy that's going to have a lot of trouble in the coming 6 to 12 months if it's as strong as this services PMI and this ADP number showed us today. It's going to have a lot of trouble cooling that inflation level. Right. Now, is the Fed just going to hike one more time and sit? Maybe. And maybe that's enough. And maybe it just takes a lot more time. But there's been one soft landing in the history of the activist Feds going all the way back to 1950 or so. It was in 1996. And I haven't looked, maybe I should, I haven't looked to see what the other conditions were in 1996 to see if there's any other references to what we're going through now.
Bob, to bring it back to commodities here for a sec, got less than 60 seconds, but it sounds like then that this kind of catch-22 framework might mean a limited potential for cyclical commodities like crude or maybe copper. Is that the way you think about it?
Yeah, that's absolutely what it is, because you're going to have a stronger dollar, you're going to have higher yields, medium term, and those things are going to fight commodities, but the economy behind it is going to fight back. So you're going to have caps on the upside, you're going to have floors on the downside, and you're likely to have this same sort of channels, whether slightly upward sloping like copper had been, or whether slightly downward sloping like crude had been. And that's where commodities are going to exist until the economy picks a side.
There it is. Shows up.
MULN maybe bouncing off that low of the day.
With crude, very much range bound. Thanks, Bob.
10 minutes of Fugazi coming up.
Into our big picture discussion with the Schwab team next, taking us into the bell. We still got 10 minutes left. We'll be right back.
MULN didn't die. No, this is very, very strong. Very strong consolidation. After yesterday's rally, still up at 28%. Setting up a bull flag, kind of a cup and handle here. So the handle could keep coming down a little further to a gap fill potentially. I'll look for a reversal there, maybe on Friday or Monday or Tuesday, 17:30. Maybe pick up some more shares. Garrett said it's on reg show now, so we'll just see. Yes, people want deflation. Problem with deflation is you just have to buckle up because all your assets lose value. You get in trouble. Bad time to sell them. But yeah, that's what we need for our purchasing power to increase. Waiting for the gap fill. Yeah, I kind of am too. I got a little bit today on the low, but I'm trading a very small amount on MULN. Just enough to sharpen my skills, more or less. Like paper trading. $30.95, still liking barbecue. I thought about doing a video today. Little video update on TA for those that don't catch the live. But then I didn't. Everything's looking good. Pretty much it. No different from, jeez, why is it? Stop pulling the lines. No different from yesterday. Today kind of confirms even more so, just because it showed that support. So confirmed more of this inverse head and shoulders and this cup and handle. So when we go up, I'm not sure, but I think we are on our way. Trend is up. I don't think it'll take too long to get back to those 35 cent, then maybe 38, then gap fill at 40, and really 56 cents is kind of the next big level after this 38 cent range. Could all happen tomorrow. Yeah, because we had the auction today on was on Baby was today, right? So we might hear about something from that today after hours. Is that true? Could that be? Or tomorrow? That's scary. Maybe I should sell my shares.
This year. What we're looking at in terms of what the rise in short-term yields means and how that's playing into Fed rate hike expectations, despite the rise in short-term yields and despite the data we saw this morning that's showing that the labor market is still relatively tight and isn't loosening as much as the Fed officials would likely expect, we're not seeing Fed rate hike expectations necessarily rise as much as we would have expected. If we look at the Fed funds futures market, they're pricing in roughly 1.5 rate hikes. And that means that the market hasn't fully committed to 2 rate hikes like the Fed has. But what we are seeing is a more pronounced hold at its peak rate.
That's a great point. I'm glad you bring to us. It's really important because I do think it explains maybe why the dollar is still subdued today and why we're not getting like this freak out mode. Why do you think that's happening, Lizanne? Why do you think we're not pricing in a more aggressive Fed? Do we just need more data?
I do think we need more data. You know, the data dependency, which Powell and other members of the Fed have really been emphasizing, certainly suggests that July is a go, and that's what the futures market.
My wife says data. I say data.
Data is saying, but
I'm right.
Between the
She's
July
wrong.
FOMC meeting and the September meeting are many weeks, which include inflation reports as well as labor market reports. So, I wouldn't be surprised if during the press conference that the Fed says September's on the table, but is certainly not making any formal commitment to that. I still, to Colin's point, still not quite sure the market has come to grips with the high or higher for longer, the for longer part, and the desire on the part of the Fed not to repeat the mistakes made by Burns and company in the 1970s of declaring victory on 3 different occasions against inflation, easing policy only to let inflation out of the bag again, and then they had to scramble to tighten policy again. And I really think that is the mission that Powell sees himself as on, is keeping inflation from reemerging. And that suggests whenever they get to the point of not just pause, but stop, their inclination is to stay there for a while.
Right. That's that's the important part, right? Because even as we're not pricing in more hikes, the cuts now are gone from the conversation. So the market kind of closing that gap there. The commentary that we've heard so far from some of the speakers, what do you make of that, Colin? Should we expect the language to maybe get a little bit more aggressive now that we kind of saw the Fed's hand more clearly after minutes?
It might get a little bit more aggressive. We're hearing the similar comments that we've heard from all these speakers. Today we heard Lori Logan, who was pretty explicit about what her plans are and what she would like to do in terms of raising rates more to fight inflation. What we know is that there's a number of Fed officials, voters and non-voters, who think inflation is still too high and they see a need to hike rates more. We think the pause and then the updated projections were sort of a compromise. We kind of get that from the Fed minutes. But given what the economic data has been doing lately, and that it has been coming in stronger than expected, it seems like maybe that hawkishness will be either more pronounced or we'll get more people being outspoken about the need to hike rates more. I think Lizanne made a really good point before about not just the length of time being held at its peak, but real rates, inflation-adjusted rates being restricted. Now, I think that's important. If we go back to 2022, for example, with those high levels of inflation, that kind of offset some of what the rate hikes were doing and what actual yields were and borrowing costs were now. But now real yields are positive. They're no longer in negative territory. That's restrictive. And we're seeing that. So if the rate of inflation is coming down, but if borrowing costs are still rising or staying at a high level and above the rate of inflation over time, and especially as the Fed holds at whatever that peak rate ends up being, that should have an impact on both households and corporations in terms of their expansion plans, spending plans, borrowing plans and just overall growth profile.
Auctions tomorrow?
Lizanne, to the
I thought it was tomorrow and someone was in here saying it's today.
pressure that higher
My
for
bad.
longer will have on the economy with the fact today we're getting, I mean, just the smallest
Wolf?
yield curve expansion.
Rumpkin, you still need an explanation on my Barnes & Noble's rally.
How should we be reading that yield curve going forward? Do we root for it to go up? Do we want it to go down?
Over the weekend, I overheard somebody waxing philosophical about if the yield curve
Wolf looked good. Now it looks pretty extended. I mean, it could keep going, I guess.
I thought, no, that's not really the case. So
got resistance kind of right where it's at. What, 2.5?
the curtain call for
Almost there.
historically has been when the yield curve
Seems like a chase. Bit of a chase.
recessions haven't started.
Might be a nice short though. If you're ever late to a long, you can always just wait and go short.
Inverted territory. So this idea that a steepening is some sort of all clear sign for the economy suggests that you haven't looked at the history of yield curves and what it says or doesn't say about recession risk.
All right, that is exactly why I asked, to give us that reminder. Thank you very much, Lizanne and Colin. Great conversation.
If you like your job, mute it.
A couple of very important points ahead of tomorrow with employment data.
You're fired.
We're going to take a look at some charts in the pressure.
Thank you guys for the support today. It is Thursday. One more day left in the markets this week. We do have some data tomorrow. Tomorrow morning, pre-market. U.S. non-farm payroll 8:30. U.S. unemployment rate 8:30. U.S. hourly wages 8:30. And then Goolsbee is speaking to Chicago Fed president. SPY down 0.78 on the day. And tomorrow will be more telling if this is a cup handle that is being formed. We maybe hit the low of the handle today and might continue to fill this gap. Or if this is an inverse cup, the handle here, we hit some kind of high tomorrow. Could happen in the futures too. Could happen after hours. High tomorrow, and then that'd be bearish, of course. Would be leaving a gap up here too, which kind of interesting. But yeah, that's where we are today. Nice day for trading. Nice smooth price action, big volume. Not really chop. Once the market made its full down move and up move, then it kind of danced around VWAP for a bit, but overall pretty clean. Barbecue, very nice. Morning had me a little nervous, but showed a nice support, nice bounce. A lot of strength there, so that's nice. And ending the day almost back to even. So I expect to come up anytime. Tomorrow, Monday, Tuesday. And just see how high we go. MULN, what kind of volume we get on MULN today? MULN's volume 1.8 billion. Crazy. Jage said it was on it's on Reg Show now. Even checked. Let me check on here. The borrow fee and stuff has been pretty low on it. Imagine it's got to be coming up at some point, right? No, borrow fee still what, 10.4. It's actually come down in the last few days, continuing to decline. So kind of interesting there. Tons of available shares. Not sure why that's doing that. That's what I'm saying. Like, you can't just follow one little point that we have. Retail, we have such limited scope into what's actually going on. This thing is rallying and has billions in volume, and the borrow fee is low and tons of available shares. So what the heck, right? I don't know what the FTDs are on it. But yeah, it looks pretty good, honestly. MULN, like, I think we still could see some sell off into that gap fill. Did kind of double top here, making a bit of a cup. So looking for a reversal around that gap fill for a handle, and then maybe back up to 30 cents and beyond. Share buyback was the news this morning, and then fighting naked shorts. I hired a law firm to do that. It's the news yesterday. So I have a couple catalysts on a potential squeezy one. Today. Why isn't it showing me? So on the futures we did today. Here they are. So I had shorts overnight that I closed out this morning. Too soon, Junior. Should have waited for sure on my shorts. Went long much too early as well, but ended up still making it back because it came back above it. And then trade around a little bit for small gains throughout the day on the futures. And then on our options today, there's the SPY puts I held overnight. Closed those early again. That's the MULN. I actually closed pre-market at that 30 cents. And then did a couple more SPY day trades. So not a whole lot of, no other swing positions that I opened today. My long stuff is down, but I do have some short spreads on them to hedge. So I've got short calls and these beyond long calls. The bearish play on Confluent. It's slow going. These are longer term FSLR puts, FSR puts. Generac. Generac's actually come down quite a bit, so kind of missed my window a bit there. But it could still come back up into most profitable zone. So as it comes down, depending on which outpaces the price action or the time, this will gain or decrease in value, but not too much because again, that the short call I have on it is increasing or giving me value back on what I'm losing on the long. Joey put, that's a long term. Same with Lucid. Here's a couple SPY calls I've just let them expire worthless into close, very cheap. Teladoc and Zoom, of course, are down today with the rest of the market. That's the trading account. Do have other trading accounts. The Theta Farm and stuff like that. Didn't open anything on it today. Didn't close anything on it today. There were some orders I put out, but nothing got filled. Yesterday was a good day to mostly close those cash cleared puts. Today was a good day to potentially leg into some, or average into some rather. I am looking at potentially RAD for some shares, some calls, maybe some shares and cover calls. Curious how MULN does after hours in pre-market. And yeah, on the Theta Farm, which right now is being held hostage by my shares. Why is it disappearing? Down here, let's see, we've got 30,000 in barbecue, and just a few MULN shares there. And I've got more barbecue on the long term, and then in the IRA. So yeah, that's where we're at. 50 likes in the stream. Thank you guys so much. I appreciate it. We were sluggish this morning, but you guys kicked it into high gear. Coming into close. MULN after hours. I don't know. I think it's slowing down. We're supposed to be close to 50 billion. I don't know what you're seeing, Poison on Bye Bye Baby. Thanks, Zoomy. Appreciate it. Yes, good day indeed. Kitty Daddy. You can ask me tomorrow for forgiveness. Today, I just can't do it. Can't do it. Thank you guys for your support, though. Thank you for your likes. We are at 52 likes in the day. Well done. We will see you on Discord. See you on Twitter. Sub up, like up, comment down. Happy money sticks around. Discord is pinned in the chat. We'll see you on there. Thanks, Jay, from the Bay. Thanks, Poison. Thanks, Seaman. Thanks, Christopher. Thanks, Grumpkin. Thanks, Zoomy. Thanks, Jess. Thanks, Poison. Cameron. Chuck L. Appreciate all the support, guys. Have a good afternoon. Peace out.